huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the fifth most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines.
Okay, guys, sorry. We have to cancel the order because, as you can see, it moved away from our order. For time being, please cancel your order to buy euro. Let's see where it will go, and then maybe we'll place later on new order to buy. Okay, guys, I'll speak to you later.
2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, here it is.
channels in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to these islands, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forests, seagrass beds, All of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Biggest rally since March. Stocks at or near session highs. Green on the screen, right to the numbers. The S&P up now by 98 points, a gain of 2.1%. Dow Industrial surging 513 points, up 1.5%. NASDAQ is up 485 points, up right now by 3.2%. 10-years down 10/32, 10-year yield 1.46%. Spot gold up 0.3%, 1784 the ounce. Bitcoin up 1.6%. 50,940 on Bitcoin. Crude rallying 4.2%. West Texas Intermediate crude 72.39 a barrel. Russell 2000 advancing 2.9%. Nasdaq 100 index up now by 3.1%. Stocks are staging the biggest rally since March. Major averages surging on optimism the Omicron variant will not derail global growth. Jill Carey Hall is U.S. equity strategist at BofA Securities, and this morning on Bloomberg Surveillance, she told us she is cautious, though, heading into the new year.
We're only forecasting a flattish market through next year. We have a 4,600 year-end target on the S&P 500, and you have the Fed tightening into a overvalued market. You have very bullish equity sentiment. You have earnings growth slowing to trend. We actually think dividend growth will be better than earnings growth next year.
Jill Carey Hall of BofA Securities, the Office of the Comptroller of the Currency, says American banks are increasingly under the gun from cyber attackers seeking to extort their businesses. The finding comes in the OCC's semi-annual risk perspective, saying it has observed an increase in ransomware attacks. Among some of the bank stocks today, they're all higher. JP Morgan Chase up 1.3%, Citigroup up 0.7%, Wells Fargo up 2.5%, Bank of America up 1.1%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol.
Period as well, because man, we are up today. There are, again, everything is awesome.
Yeah, thank you, big tech, especially Apple. We're going to talk about that in just a minute, where Carol's referring to U.S. stocks staging the biggest rally since March.
Exactly. We're going to talk about that. We're also going to talk about the threats to U.S. listings of Chinese companies. Was DD Global an isolated event or a sign of more things to come?
Well, that's certainly a question we're going to be asking one of our guests later this hour. And we're talking to Peter Lynch. You might remember him from Fidelity's Magellan Fund. Did you know he retired at age 46?
I forgot he retired so young. And I'm just going to say, there's probably a whole generation that are like, who's this dude? Google it.
Because this is Magellan Fund.
Remember, it was the most well-known mutual fund and the largest for a long time in America.
Took it from $14 million to, $18 billion in a few years.
Behemoth, and he only invested in companies that he understood the business of. It was so simple. So it just made a lot of sense. Also, I don't know if it makes sense, but man, there is a lot of brazen opportunists out there that are dealing with the RTO dilemma.
Well, speaking of returning to the office, Jane Oates, president of Working Nation and a former U.S. Department of Labor official, on what actions are making a difference in today's employment market.
All right, we'll stop teasing the show. We got a lot coming up, but we got to get to the markets. Let's get to the Market Drivers Report. Let's set that Business Week agenda, because Kriti and Katie sitting here so patiently. Kriti Gupta is Bloomberg Markets correspondent at Bloomberg News. Katie Greifeld, Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor, both in our Interactive Brokers studio. Stage is yours, Kriti. I mean, we've got a rally.
Yeah, we've got a rally. I believe a 3% increase, or rally, I should say, for the NASDAQ, the biggest since March. So this is going to be significant here. You have a fast and furious buying the dip. I hate to say that it's happening again, but it is. And it's a very broad rally.
People do buy the dip.
People do buy the dip, but it's technical as well, because our producer Dan Curtis pointed this out today. The S&P 500 is also bouncing off of its 200-day moving average, in addition to the fact that you also have some fundamental aspects, which is good news, Carol, because when you start to see tech leading the way higher just on that Haven bid or just on the buy the dip, sometimes it kind of gets the feeling that you're in a little bit of a bubble. The market isn't trading on the fundamentals. But today, it's Apple getting an upgrade at Morgan Stanley that's having that's kind of leading the rally. You have Intel spinning off its Mobile Eye self-driving unit, also leading some of those gains. So there is actually good news in the markets, and they are based on fundamental individual stock stories.
Well, the opposite sort of fundamentals are non-profitable tech names. I know Katie Greifeld has been keeping her eye on those. What's going on with that Goldman basket of unprofitable tech companies?
For every fundamental story, there's something very silly going on under the surface, and Goldman has these great baskets. It puts together a portfolio of non-profitable tech shares. Had its worst week since March 2020 last week. Completely different story today. It's actually on track for its best day since April 2020.
You know, we talked to Mark Mahaney earlier at Evercore ISI, and he talked about this a little bit, the idea of the price to sales stocks and price to earnings stocks, and those ones that don't have any earnings get hit hard in periods like this.
Absolutely. And he also made the case that, investors really should do their research and look at fundamentals. But, I mean, for these stocks, if you put that together with the fact that the ARK Innovation ETF on track for its best day since March 2021, the fact that Bitcoin is rebounding, just feels like the speculative fringes of the markets getting a little bit of life breathed back into them. I can't wait for Friday's jobs report because I think that's going to be a real big test.
But it's also a big test.
I'm sorry, inflation report. It's been a long 2-day week.
I get you. I feel
You're already
your pain
thinking about January.
I was asking about Friday yesterday. But what's interesting, Creedy, too, is, and I think this is really important when you say technical moves as well as fundamental moves. Like if you believe, and Tim and I talk a lot about Cathie Wood and others who believe in fundamental stories, they make their bets, there's going to be volatility. But if you believe the fundamentals on a company, even when there's a sell-off, for you, it's probably an opportunity. Like you understand this is Peter Lynch, fundamentally understanding how a company, what it's all about and where the growth opportunities are.
Yeah, and to your point, there's so many investors on Wall Street, so many reporters in this building who are waiting for that big correction or waiting for that kind of downtrend to say some of the kind of bubble mania that you've seen in the stocks or the market broadly, the bond market arguably too, is going to come out at some point. But think about where we are. We are still growing from an economic perspective around the world, in China, in Europe, here. We're coming back from a year that quite literally halted the global economy.
Shut down.
Right. So the growth makes sense. Isn't that what markets do? They price in growth.
Don't you guys think about, though, because there's a lot of stories on the terminal, too, about bubble. Like, don't forget, like, we have these bubbles. Everybody gets hurt. There's, I think, bubbles, there's froth, there's just the market getting ahead of itself, but it doesn't necessarily mean just because a company gets ahead of itself that it's a bubble, right? I mean,
Yeah,
I don't know how you guys feel about that.
Even with those non-profitable tech shares, I mean, the hope is, or the belief is, in the future, they will be profitable. That's the entire underpinning of a growth stock.
Amazon, hashtag.
Amazon, hashtag, exactly. Again, though, we are heading into a really interesting and difficult 2 weeks. I mean, at the end of this week, we have the CPI report. We have the Fed coming up. Remember when Powell made that little bit of a hawkish hint that they might accelerate the taper? Everything freaked out. I mean, it's party time right now, but it could get ugly pretty quickly.
Wow, what a way to end.
Is that too dour? Is that too much?
But maybe it's not the party ending, it's just a reality check. And as Creedy says, we're still growing. China, maybe not growing as much, still 5%. Like, this is momentum. We're not going into a recession?
No, it's simply, like you said, a reality check. And I mean, there's sectors that are built for this. I mean, that's when you
Tim, you have no chance with 3 women in the room.
Just going to remind you of the
chance,
25% year-to-date gain on the S&P 500 right now. It's been a year.
Yeah, it's unusual, but that might also be the new normal because think about the acceleration of the growth. Once again, coming back to the fundamentals, Tim, come on, get on board. Get on board. But to the point about bubbles, just very quickly, Jeremy Grantham is a longtime bubble historian, and he says, or I remember this in a panel from last year, he very clearly said bubbles can last years, right? And arguably, even before the pandemic, there was a tech bubble, right? It was a 10-year expansion, and it lasted for 10 years, which was far longer than any other economic cycle. So this happens all the time, and maybe this is the new normal.
Just going to say, more people are populating the Earth. There's going to be more demand. There's more, I don't know. I mean, it's why Earth is kind of screaming back at us right now. They're like, I can't even support all of you that are here. Okay, I'm off my soapbox.
That's okay.
All right, we got to do the bite of the day.
All right, well, I think we're going to go to Nancy Lyons in D.C. with a check of the latest world and national news. Nancy Lyons is standing by in the 99.1 newsroom. Hey, Nance.
Hey, Tim. A high-stakes meeting has been held today between President Biden and Russian President Vladimir Putin.
Hello. Good to see you again.
The White House says President Biden warned Putin in their 2-hour phone call that the U.S. would respond powerfully to an attack on Ukraine. Russia has moved more forces along the Ukrainian border. Putin has made it clear he wants assurances Ukraine will not be invited to join NATO. President Biden will now share what the two discussed with the leaders of France, Italy, Germany, and the UK. A Senate hearing is underway today concerning the January 6th attack. An inspector general for the U.S. Capitol Police says there's more work to do to improve training, operational planning, and intelligence gathering. The Senate Rules Committee ranking member, Missouri Republican Roy Blunt, agrees.
We're going to work together to see that the officers are better trained, better equipped, and better prepared.
Blunt says, though, it is important to learn more about the leadership failures on January 6th. Former White House Chief of Staff Mark Meadows is apparently no longer cooperating with the House committee investigating the January 6th insurrection. His attorney cites a breakdown in negotiations with the panel. He says a deposition would be untenable because the panel, quote, has no intention of respecting boundaries, concerning questions that former President Trump believes are off limits due to what he says is executive privilege. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Yeah, you gotta love a co-host that can get you laughing even when you're cranky. Carol Massar, Tim Stanovic in our Interactive Brokers studio. So a couple stories that we wanted to bring to your attention that have to do, obviously, with COVID. There's a bunch of them. The COVID-19 vaccine from GlaxoSmithKline and Canada's Medicago, I believe, demonstrated 71% efficacy against multiple variants of the disease. The result is positive for the pandemic latecomers, even though the latest Omicron variant wasn't in circulation at the time of the trial. So that doesn't mean future variants, it just means the existing ones?
Yeah, we don't know what the future variants look like.
Right, like that's why I was confused a little bit.
And there's some other interesting Glaxo news today. So in a separate study, Glaxo said that its COVID-19 antibody treatment was effective against Omicron and would stand up to all mutations in the spike protein. So that's a treatment.
All right, so that's interesting.
Good news.
And we're going to talk. We have a guest coming up in just a moment that is going to talk to us. He's actually the CEO of Tonix Pharmaceuticals, and they are also working on a COVID-19 vaccine and solution. So we'll get to that in just a moment. The other story I wanted to bring to you that definitely caught my attention: the share of global wealth held by billionaires surged to a record during the COVID-19 crisis, according to a group founded by French economist Thomas Piketty. Am I saying it right? Piketty. I took Spanish, not French. About 2,750 billionaires control 3.5% of the world's wealth, according to the Paris-based Global Inequality Lab. Said they put out a report today. That's up from just 1% in 1995. I say just 1% in parentheses, with the fastest gains coming since the pandemic hit. According to the group, the poorest half of the planet's population owns about 2% of its riches. It takes my breath away because it's what we talk about so much, Tim, about the gap between the haves and the have-nots in our society.
It's also something that policymakers are thinking a lot about, especially here in the United States, because of what happened in the 10 years since the financial crisis, 10 plus years since the financial crisis, the recovery. So many of the Americans at the opposite end of the income spectrum did not benefit with the low interest rate environment. But this is global, Carol.
Yeah, no, absolutely. And you do wonder, and that's why I think there's such a disconnect between sometimes what's happening among leaders and C-suites versus a lot of workers that are out there. So it's something maybe we can talk about a little bit later on our broadcast.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Technology leading the biggest stock rally since March. The NASDAQ 100 index up now by 3%. NASDAQ Composite Index up 3.1%. NASDAQ is up 472 points. The S&P is advancing by 96 now, up 2.1%. The Dow holding on to a gain of 503 points, up now by 1.4%. Major averages rallying on optimism. The Omicron variant will not derail global growth. Treasuries fell, sending 2 years to the highest, 2-year yields to the highest in 9 months. Right now, gold is up 0.3%, $17.84 the ounce. The 10-year yield, 1.46%, 10-year down 10.30 seconds. Bitcoin up 1.9%, 51,060 right now after that weekend swoon. We've got Bitcoin again up now by 1.8%. Gold, as I mentioned, up 0.3. West Texas Intermediate crude up 3.8%, $72.15 a barrel. Intel plans to list shares of its Mobileye self-driving car business by the middle of next year, letting the chipmaker capitalize on its investment in a growing industry. Shares of Intel, they are advancing today. Right now, we do have Intel shares up by just about 5%. Again, recapping, stocks higher, S&P up 96, up 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. It's Tuesday. It's Carol along with Tim. We mentioned some of the COVID headlines. Another one I just want to mention before we get into our guests. Researchers in Hong Kong said they have developed the world's first stainless steel that kills the COVID-19 virus within hours, adding to the arsenal of products being created globally to curb the pathogen that triggered, as we know, the worst pandemic of the past century.
That's pretty cool, right? Can we get those in the subway stat?
Can I have a steel suit, please?
Exactly.
All right. So also working on a COVID vaccine is Tonix Pharmaceuticals. Joining us once again, Dr. Seth Lederman, co-founder, CEO, and chairman of the New York-based specialty pharmaceutical and clinical stage biopharma company. And he joins us on the phone in New Bedford, Massachusetts. Dr. Lederman, good to have you back here on Bloomberg. How are you?
I'm well. Thanks for having me back on, Carol and Tim.
Well, so we've been talking with you, I think, since the pandemic began or just shortly after that March 2020 date. You guys have been working on many things, but also a COVID vaccine. I am curious, can you give us an update on that?
Yes, we think the need for innovative new vaccines is growing with all the information that we get. We're working on a live virus vaccine against COVID, and we are convinced to do this because live virus vaccines tend to give longer durability of protection. So while the original vaccines that came out have taken the wind out of the sails of the pandemic, in the end, they are limited by how short a term of protection they give, and also potentially by these new variants.
Well, let's talk about those new variants. What changes do you make at this stage where you are with the development of this live virus vaccine when you see news about the Omicron variant?
Well, the Omicron variant is interesting. It appears from what we know, well, first of all, there are many mutations in the spike protein, which is the antigen in our vaccine and in other people's vaccines. But it does seem to be more transmissible, and it also seems to evade the antibody-based protection from vaccines. So one of the themes of a live virus vaccine, one of the reasons we're working on it, is that T-cell immunity has a different spectrum of protection than antibody immunity. So we think that the T-cell stimulation from our vaccine will still provide a protection against Omicron. And to the extent that vaccinated people do better on Omicron, people are now talking about the fact that the mRNA vaccines do confer some T-cell immunity.
Well, and this is, I guess, what I'm trying to understand. And I know you're a publicly held company, a small market cap, but I do wonder, in terms of the development of the T-cell immunity, I mean, how soon before we see something from you or that goes through actual testing before regulators and through the normal process of a drug development? What's the timeline for that?
And I guess what I'm asking as an investor, I'm putting my investor hat on, Dr. Letterman. Investors, I'm curious, what's a catalyst for potentially the stock, which, as you know, has been pretty hammered?
Yes. Well, we expect to be in humans in the second half of next year. So, a little bit less than a year from now, or a quarter less than a year from now. But the COVID problem is not going away. So I think in terms of catalysts, first of all, as we continue to get more animal data and move our product through the development timeline, I think we'll get closer and closer to getting interest. I think the other thing that could be a catalyst for us is that the government really needs to become a leader in the second generation of vaccines, just like they were in the first. The United States really led the way through Operation Warp Speed to the mRNA vaccines and the Johnson & Johnson vaccine. But now that those vaccines have shown their limitations, and mostly the limitation is the short duration of protection, there are other issues like supply chain and things like that. But I think that there is a need for the government to get more involved in spurring the next generation of vaccines that can address some of these limitations. So when the government starts moving in that direction, I hope that would be a catalyst also.
Help me, and forgive me for all of you smart folks there in the medical community, Dr. Letterman, yourself included. The flu vaccine, that doesn't create T-cell immunity, right? Or is that just something different?
You're correct. It mostly generates antibody immunity, but the flu vaccine is not one of our best vaccines. Flu vaccine, some people estimate it only confers about 30% protection. But, that's appropriate, and I get mine every year, and I hope it works. But I think that the live virus vaccines that confer long duration of protection are things like MMR, measles, mumps, rubella. Another one for live virus vaccines was the vaccine that eradicated smallpox. So on the one hand, it's the oldest technology, but on the other hand, it's still the most effective technology.
All right, interesting stuff. And I know we'll continue this at another date. Dr. Seth Letterman, thanks so much. Co-founder, Chief Executive Officer, Chairman of Tonix Pharmaceuticals, which, by the way, in an overall upmarket rally on, risk on, Tonix also up about 7.8% in today's session. But we've definitely, as I mentioned to him earlier, the stock has been under pressure this year. It's down about 34%. It's about a $208 million market cap.
Interesting to see continued development of vaccines where we are in the pandemic, and where we are in the pandemic when it comes to durability of the vaccines we've been taking for months.
Like the tools, right? The build out we continue to see on a lot of different fronts. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. We're going to join our TV team in just a moment as we get ready for the market close.
down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And we are about 89 minutes away from the end of the trading day on this Tuesday afternoon. Romaine Bostic here, Taylor Riggs, Shanali Bassick in for Caroline Hyde, counting you down to the closing bell, and here to help walk us through it, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, we've been talking a lot about these drawdowns that we've seen in the market. We've had some pretty big ones earlier this year, and at some point, we saw the dip buyers come back in, and today seems to be one of those days.
Yeah, absolutely. I'm also thinking about correlations. Is it, COVID and then what goes on in the market? It feels like almost a true one correlation there, because when we see easing concerns when it comes to the COVID pandemic, you do see investors get more enthusiastic, understandably so, about the economic outlook, and we see them moving back into the market.
46.94, that was your high on the S&P 500 intraday. That's just about 10 points away from its all-time high. The Dow Jones Industrial Average up about 1.5% on the day, but the outperformer, it really belongs right now to the NASDAQ Composite and the NASDAQ 100. The NASDAQ Composite up 3% here on the day, and you're seeing those big cap tech stocks, Taylor, and everything in that software space, that hardware space, really sort of push this market higher.
Yeah, and at least from a sector level, if we're going to do this as we count you down to the closing bell, just about 90 minutes away, it is the Infotech Index, technology index, basically, that's one of the best performers on a sector level. You're up 3.3%. This is where things get interesting, because on the NASDAQ, you're still off about 2% from some of the record highs. Romaine's going to fact check me here, but when I was at my desk 3 minutes ago, this was at a record high. So you are seeing, at least on a sector level, some of these stocks still push that sector to a record high. Energy, Romaine, we were talking about...
still holding at a record high.
It is? Okay, good. I love when I'm corrected and I'm right. That will do it for me. Energy, of course, one of the better performers as well. Carol, you're up now about 2.75%.
All right, so let's talk about some individual names that are outperformers. And Taylor really hit it. I mean, pick your technology names. I love it when everybody's like, oh, the time is over for big tech. And yet then when there's a pullback, everybody comes back into the market. Apple up 2.7%. It's off its highs of the day. But remember, what's funny is yesterday we had a story about the tech route, that there's more to go. And yet here you see investors just pushing all those big tech names higher. In terms of Apple, we did see the company getting a second street high price target. Morgan Stanley saying it sees it benefiting from new product categories in virtual reality and autonomous vehicles. So investors moving once again into Apple. That stock up just shy of about 30% this year. Microsoft up 2.4% today. Also, big run this year, up 50%. So even when there's a slight pullback, we have some perspective on what a run this company has had. NVIDIA, anybody in the chip space you've seen really strongly performing. And again today, NVIDIA, you can see it up about just shy of 7%. Amazon too, up about 3% in today's session. Despite, I think, Tim, there was some concerns and some worries about some AWS and Amazon users being able to get access. Didn't matter, didn't bother investors today.
Yeah, some reports of outages earlier in the day today, but not much stopping this rally. And if you look at the S&P 500 right now, only 39 stocks actually lower in the entire S&P 500. Cable companies taking a leg lower this afternoon. Comcast shares down about 5% after Dave Watson, who heads Comcast cable division, told a UBS investor conference that Comcast expects to sign up about 1.3 million new high-speed internet customers this year. The Street wanted to see about 1.4 million. That's according to the average of 11 estimates compiled by Bloomberg. We saw other cable companies move lower after that, including Altice USA and then Charter as well. Charter down right now as well. Also, Merck down 2.1%. Shares fell as much as 2.6% earlier, the lowest in more than a month. This after the drug maker paused enrollment in trials of a key new HIV regimen.
Yeah, and I mean, you look at some of those down numbers. You talk about 30 plus 39 stocks in the red on this day. You got more than 60 stocks right now across the tape hitting 52-week highs, most of those record highs on this day. And guys, that has a lot to do with the valuations that we saw off of that drawdown. You've had 3 big drawdowns this year on the S&P 500, 4 big ones on the NASDAQ. And once you get to a certain point on a technical level, usually it's somewhere right below that 50-day moving average into that 100-day. You see a lot of folks look and they come back in here. There are a lot of people that think as long as you don't have any sort of prolonged and persistent inflation, that some of these valuations can remain intact.
Yeah, and we know that liquidity backstop is still in play. If people are worried about the Federal Reserve, they're not worried about it today. Not only do you have the NASDAQ and the S&P higher, you also have the Russell 2000 much higher on the day too, more than the S&P today. So you are seeing it even among those smaller names.
What's interesting too, and Kriti Gupta pointing this out of Bloomberg, saying that it's not only a technical move that we're seeing in a bounce of those major major equity averages off of some of those moving averages, is what's interesting is like the Apple story. You have an analyst come out and say, here's why I think it has a lot more room to run. Fundamentally, there are stories out there. And I think it's interesting on a day when one of the most read on the Bloomberg terminal has to do with Peter Lynch, who only invested when he fundamentally understood the story of a company that we're talking and focusing on fundamentals. It matters.
And Carol, you're so smart to mention Katie Huberty, of course, of Morgan Stanley, talking about that Apple call. We're going to have a really interesting conversation coming up, talking about some of these chip makers as well. We're going to continue to do that as we talk about a stocks index that is, I mean, huge, up almost 5% on the day, Tim. And so it really gets down to the premiums. And analysts are saying, look, you can be justified at a 44 times forward PE ratio.
Yeah, I think we can't ignore the virus in the conversation with what's going on today, guys, because that's certainly a big part of it. And it was the pattern in the theme yesterday as well. The more data that we get about Omicron, and when we don't want to look too much into it, but it certainly seems like investors are looking past it right now as we continue to get more data about what this variant does and what happens to people who get it.
And they still have an eye on that. You got a day like today, and guess what? Novavax is up 26% because of the potential for finally getting some sort of European approval for its vaccine. So people are certainly still pricing in the idea that COVID is with us to stay, and I guess they're looking for opportunities there as well. You're seeing, in fact, a pretty big rally, broad base in the biotech space right now, Carol and Tim.
All right, I'm going to put out December 15th. Does the Fed kind of rain on our parade or the Bulls parade? Because you do wonder, do they say something ultimately or do something?
18 days until Christmas.
All right, what will be under
it's not too late.
What will be under the Christmas tree?
If you want to get it shipped in time for me, you should order it.
All right. We're getting on it for you, Romaine. All right, that's going to do it for Beyond the Bell. Actually, that's coming up, of course, at 4 p.m. Wall Street time. That's going to do it for our countdown to the close live on radio, TV, and on YouTube. But do join us again for Beyond the Bell. We'll be together again, counting you down to that closing bell.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, and our thanks to our TV team, Romaine Taylor and Shanali there. We're going to join them again for Beyond the Bell in just about, 90 minutes time?
Look, we talked a little bit about Apple. You brought up Katie Huberty at Morgan Stanley, her note that hit early this morning, and it really, I think, set the theme for what we're seeing today. It's also worth noting that right now, Apple, on a points basis, is the gainer when it comes to the S&P 500. It accounts for 8 of the points in there right now. Microsoft, NVIDIA, Amazon, Tesla are rounding it out. But if you think about it, because it's such a big company by market cap, when Apple moves, that has a big influence on the direction of the S&P.
6.7% of the S&P 500, 3% of the Dow, and almost 11% of the NASDAQ. So you're right. So it's, we have to remember that. But it also reminds us that when everybody's saying, oh, these guys have had such a run, they're significant companies. They're behemoths in terms of market size, in terms of every time that Apple reports a quarter, we're all like, oh my gosh, look at these numbers. Even when they disappoint, they sell tons of stuff. Highly profitable.
I'm buying it.
You just bought it.
Did.
All right, let's get back to World and National News for that. Over to Nancy Lyons. She's in our 99.1 newsroom in the...
Thanks, Carol. President Joe Biden and Russian President Vladimir Putin spoke today for about 2 hours.
We didn't get to see one another at the G20. I hope next time we meet, we do it in person.
The White House says Biden warned Putin that the U.S. and its allies would take strong measures to respond to an attack on Ukraine. This as Moscow masses troops on the border of the Eastern European nation. Bloomberg has seen documents that show among those measures could be pressing Germany to stop the contested Nord Stream 2 gas pipeline. This was the 4th direct conversation between the two leaders this year. President Biden's panel that's been studying changes to the Supreme Court for months is set to vote on its final report. Bloomberg's Nathan Hager has more.
A draft released last night embraces modest moves like keeping live streaming of oral arguments going and adopting an advisory ethics code. But the report stops short of the changes many liberals had been pushing for, like term limits for the court and expanding its membership. Instead, the report weighs the pros and cons of those ideas and discusses whether they'd require new laws or constitutional amendments. Many progressives had feared little would come from the commission. They viewed it as a way for President Biden to avoid election year pressure over the Supreme Court. In Washington, I'm Nathan Hager, Bloomberg Radio.
Instagram is rolling out a new feature today that urges teens to take breaks from the photo sharing platform. It's also announcing other tools aimed at protecting young users from harmful content. The company, now Meta, has come under criticism for not doing enough to rein in harmful content, and it's also facing new legislation that would impose restrictions on how it operates. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I wonder what the RTO industrial complex would say about this next story. Of course, RTO stands for Return to the Office. We're going to talk about that. There's a great story in the upcoming issue of Bloomberg Businessweek magazine by our Matt Boyle. We'll talk about that in just a moment with him and Businessweek editor Joel Weber. But in the meantime, catching our attention is the first ever COVID. Well, it's not the first ever.
What do you...
No, forget it. Right?
Okay.
I'm mix mashing some
That's
stories.
okay. I want to talk about that.
It's not the first time that a boss has fired a bunch of people on Zoom.
Yeah, you're right. This column by, I think I can say this, one of my favorite people who works here, Mark Gongloff, who works for Bloomberg Opinion. You can sign up for his roundup of Bloomberg Opinion, too, by going to Bloomberg.com and checking that out. Writes that there are a few good ways to lay off a bunch of people, but there are many, many bad ways. Firing 900 people over Zoom is probably one of them. Carol, this is a story about Better.com, and Mark writes that they're leaping into the pantheon of worst layoffs ever.
So this is the CEO of Better.com. It's a real-life fintech mortgage unicorn. It's worth an estimated $6.9 billion, and the CEO, Vishal Garg, did a mass sacking last week. He called a hasty Zoom meeting with 900 employees to invite them all to no longer work for the company. I don't even...
You can actually watch the video, by the way. I watched the video.
Did you?
Yeah, it was going viral on Twitter. Somebody made a video of the guy the CEO laying people off, and at first I thought, this can't be real. He was reading from notes. It was just like, I know there's no good way to lay people off, but perhaps this will be a lesson to some who need to go do mass layoffs of what not to do.
And he says he's laying off about 15% of his company, quote, for a number of reasons: the market efficiency, he paused, and longer pause, performances. And then, as Mark Gongloff wrote, a pause so long you think you might have fallen asleep, and productivity. Here's the quote: "It's been a really, really challenging decision to make," he said at the start of a video posted to TikTok. "This is the second time in my career that I'm doing this, and I do not want to do this." I guess it's a must view, huh?
Yeah, you got to watch the video and check out Mark Gongloff's column at Bloomberg.com. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. So a new breed of experts is here to help desperate employees and, well, really employers, to be quite honest, navigate these uncharted waters. Might be like that CEO who just fired all those workers from by Zoom.
Yeah, maybe. Well, I mean, I was thinking after reading this, maybe become an RTO consultant.
RTO, return to the office. This is a great story. Can't wait to talk about it in The Brazen Opportunist. Here in studio is Bloomberg Business Week editor Jill Weber, and also with us is Bloomberg News senior management and workplace reporter Matt Boyle. He's with us on the phone in Westchester. Experts, they're all around. They're all over, aren't they, Joel?
And they make tons of money, and they charge you to tell you what to do. And that's basically what the story's about.
Wait, what?
Yeah, exactly. It's like, you know, all these companies are trying to grapple with what the workplace is supposed to look like on a policy level, but also just in a practical one of like, how do you actually make the floor plans look now? And along come consultants to tell you exactly how to fix all of your problems. And what I love about this story was, in part, Matt's observation, which we worked in the headline of like, it hasn't been this good in the consulting business since Y2K, when everybody also was like, it's, you know, I'm going to lose my mind here. Just tell me what to do. Here's a blank check. So how blank are those checks, Matt?
Well, yeah, there are a lot of zeros in those checks, Joel. I realized from talking to these consultants and analysts that what they're doing is they're wrapping the sort of return to office advice, you know, engagements into broader work that they already were doing before COVID hit around sort of the future of work. And remember, you know, remote work didn't start with the pandemic, but it was accelerated by it. And these engagements can run $5-10 million each. It's one of the fastest growth areas in consulting actually right now.
What I found so interesting about this is it's not just the big players, which you do write about, right? The PwCs, the EYs, the KPMGs, Deloitte, McKinsey, the list goes on. But it's also individuals who are able to use LinkedIn, for example, right, to sell courses. My question is, though, Matt, is how do these people know what to do on the other side of a pandemic? Isn't this their first pandemic too?
Well, that's the bitter irony of all this is that you have all these experts running around, but we have never done this before. So who in the world can call themselves an expert when this is absolutely unprecedented in terms of, you know, this mass exodus back to the office? And every time we think it's going to happen, like remember Labor Day, we were all going to come back to the office on Labor Day, and then the Delta variant ruined those plans. And then you had a bunch of companies. I just wrote a story about how Amex and Wells Fargo and other companies, Ford, Google, were planning to come back in January, and then Omicron scuttled those plans. So even when you think you might have a little bit of a handle on it, you know, the coronavirus rears its ugly head again and throws your plans into the gutter. So yeah, nobody really knows what's going on here. So you have all these people, individuals or even huge firms like McKinsey and Mercer saying, hey, we have all the answers here. Here is our white paper. And you got to wonder, you know, who really knows what they're talking about here?
Yeah, and I bet like you really get into what's going on in HR, that they've just kind of had it. They're burnt out too. And so it sounds like all of these so-called, you know, experts, quote unquote, helping, not helping, or just making the problem even more difficult?
I mean, it depends. I mean, if you've got buy-in from the top, like, you know, if the CEO is involved and you've got a good team of people across the organization, operations, real estate, HR, then you can really at least have buy-in and, you know, and a say-so from all parts of the organization. But if you're just, you know, signing a check and telling, having a consultant walk in and tell you what to do, you know, you're going to be in trouble. And HR people, certainly, they did not sign up for this, I don't think.
You know, one of my favorite little sections in the story is that how just give you a sense of how far this has gone. Even like the office furniture companies are in on the game. So what's happening at Herman Miller and Steelcase?
It's amazing, yeah. So they're coming out with entirely new product collaborations, you know, product collections designed for coming back, and you have these sort of weird new sort of things called privacy wraps. But basically, they know that. I mean, the bottom line is that the office is not a place you need to be anymore, so it has to become a place you want to be. So everyone is roped into this, whether it's the office landlords or the furniture companies trying to figure out, okay, how do we design an office sort of the future where people are going to want to come in and collaborate, but will also have time for, their own private work. It's a big challenge, and there's a lot of smart people throwing their expertise at it. But again, it's a bit of a morass right now.
Well, another project that you write about is General Motors and what Smith Group is doing there. What's going on with these neighborhoods?
Yeah, so neighborhoods are an interesting topic. Again, something that existed pre-pandemic, but it's been accelerated by the pandemic. A neighborhood is basically an office design where you have people from the same team sort of create their own little clubhouse, so to speak, where they can collaborate, they can even grab lunch. They can work privately if they want. Yeah, so it's kind of like, this is our neighborhood. This is where we go. We can go visit other neighborhoods if we want, but this is our own little turf, so to speak.
You need an invitation to come to my neighborhood. But
the cool kids in my treehouse.
Just having fun with this one already. Clearly, we should.
Somebody just watched Succession, huh?
Yeah, there you go.
Oh man, this can go a lot of places. So Matt, what are the RTO experts doing at their own firms?
Well, yeah, I mean, it's funny. So they're giving out advice, and they also need to sort of, drink their own Kool-Aid as well. So you've got companies like PwC, which gives advice on a whole host of topics, but I spoke to their guy whose job it is to get PwC's people ready to come back to the office. And while, a couple of weeks after I talked to them, it was amazing. PwC came out and said, hey, all of our client-serving people, all 40,000 of them, you guys can stay remote forever. So it's a question of who even is going to come back to the office at all. But this guy at PwC, he's in charge of upgrading their computer monitors. You got to remember, there's a lot of sort of mundane, everyday tasks that need to be done here as well, just to get these offices ready for virtual software and collaboration. Conference rooms need to be rethought. Corner offices need to be rethought. So all elements of it have to be rethought. And these consultants themselves,
Joel, your corner office is going away.
Right.
Or coming back.
Yeah, maybe coming back, since I have such a non-existent one right now. But just to bring it back to an idea that we started with is that whole Y2K thing, came and went, and everything endured and was fine. And I think the other interesting thing here is all of this could just be for nothing, since it's all going to get redone again anyway. But.
Well, but that's what I was thinking. I remember Y2K too, and we were all scrambling and oh my God and all this stuff. And then it was meh. We were over it. Are we going to be like that in, Matt, at some point potentially, that we'll just go back to
the Y2K analogy? That was the first thing that came to me. I was like, okay, last time we saw all these consultants running around offering advice on something where we weren't really sure was Y2K. But the difference, of course, is that, with Y2K, it turned out to be a big nothing burger. But if you screw up a return to office, that could have serious repercussions. It could hurt morale. It could add to the Great Resignation. It could even, it hurt your employees' well-being as well. So there's a lot more at risk here, a lot more at stake in getting this right than in Y2K. Another analogy, of course, is diversity and inclusion consultants and the huge industry that's been built up there in recent years.
Okay, you made me reconsider my comments. It's for real. It's for real. But it just speaks to the industrial complex that you can kind of create. And so it's got to be so lucrative for these consultants also, right? Because are they doing this ad hoc on retainer? What kind of contracts do they sign up for here?
And Matt, just got about 20 seconds.
Yeah, I mean, the contracts can be ongoing sometimes. I mean, you do have some maybe short-term contracts that just need a little bit of help with a quick RTO, but these consultants like to be embedded in companies, so I think a lot of them are on retainer.
Gotta get that recurring revenue.
It is a great story. Matt Boyle, so good to check in with you. Senior Management and Workplace Reporter, Bloomberg News. Check out that story in the upcoming issue of Bloomberg Businessweek magazine. Joel Weber, editor of Bloomberg Businessweek. Headline crossing the Bloomberg, Senator Mitch McConnell saying a deal has been reached with Chuck Schumer, Senator Schumer, on raising the debt limit, something that we've been focusing on out of the nation's capital. You're listening to Bloomberg Radio.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet repeating an earlier headline. Senate GOP leader Mitch McConnell says a deal has been reached with Senate Majority Leader Chuck Schumer on raising the debt limit. Final hour of trading on this Tuesday, December 7th. We have got the Dow, the S&P, and NASDAQ all advancing. Stocks, in fact, are staging the biggest rally since March. Major averages surging at least 2% on optimism. The Omicron variant will not derail global growth. Treasuries fell, sending two-year yields to the highest in 9 months. Tech shares that led last week's decline are pacing today's rebound. For example, the NASDAQ 100 index is advancing now by 2.8%. The NASDAQ Composite Index up by 3%, up 452 points. S&P up 94, up 2%. Dow Jones Industrial Average up now by 510 points, up 1.4%. 10-year yield, 1.48%. What about the economic outlook, specifically growth? Lindsay Pieggs is chief economist at Stifel Nicolaus.
I think trend growth returns to 2% as we look out to 2022, which is disappointing relative to 6.5% again at the first part of this year. But remember, we're simply getting back to pre-pandemic levels of activity. We tend to romanticize where the economy was prior to COVID-19, but we were already losing momentum. If you remember, 3% in 2018, down to 2% by the end of 2019.
And again, we do have the 10-year yield, 1.48%. Spot gold up 0.4%, $17.84 the ounce. West Texas Intermediate crude up 3.5%, $71.93 a barrel. American Airlines Group has named President Robert Isom to replace Doug Parker as CEO early next year. A sign of stability after the COVID-19 pandemic ignited a chaotic period for the industry. Shares of American Airlines up now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So financial markets and traders are definitely wondering how far the Chinese government is prepared to go after the People's Bank of China shifted toward an easing mode, lowering the required reserve ratio for banks, and that was a move to bolster growth after a crackdown on the property industry triggered a credit crunch for developers and slashed demand for housing. We've seen, Tim, stressed firms, China Evergrande Group certainly, and some others which are on the brink of default. And so we've seen that property market really under a lot of pressure. Are you smiling?
Yeah, I'm just excited to bring back David Riedel because we love talking all things China when it comes to David joining us. He's the president and founder of Riedel Research Group. He joins us once again on the phone from San Francisco. David, great to have you back with us. Like Carol was saying, a lot of questions about how far the People's Republic of China is willing to go. How far are they going to go?
Well, thank you for having me back. It's always an interesting time to talk about China. They're certainly showing a willingness to be more accommodating, to support the economy in general and the property sector in particular without bailing out individual names. I think it's important to recognize that they have not reached out and tried to bail out Evergrande or any of the other companies that have shown significant company-specific stress, but they're trying to create an environment where the property sector can continue to grow and provide housing for Chinese citizens. So I think it's important to recognize both what they're doing and what they're not doing.
I think that's really important too. I guess what I'm trying to understand is how do we as investors, David, need to understand the pressure on certain sectors, on certain companies. There certainly feels like there's a lot more Chinese oversight and wanting to understand the data that's being collected. We saw DD Global, their delisting last week. I mean, is that an isolated case or a sign of things to come?
It's absolutely a sign of things to come. And quite honestly, China's relatively easy to read. They tell you what they're going to do, and then they do it. I think we get used to politicians not doing that. But if you look at China, they're acting in the interest of market stabilization there. They're acting in the interest of social equity on the ground. They're acting in the interest of common prosperity, their latest buzz phrase, where they're taking these newly minted technology billionaires to task in order to support society. They absolutely are committed to controlling the data that's collected by these online applications and businesses. And investors need to recognize that they have stated that that's their goal, and they are going to implement things to control that data. So the China growth story is very real. The question is, how should investors try to find a way to play that as the second largest economy in the world and the driver of economic growth for many parts of the world?
Well, and I guess what I would ask as an investor, David, is there the chance that you invest in XYZ Chinese company because you like the fundamentals, and then, I don't know, in a year, in 6 months, in 5 years, all of a sudden the government says, you know what, we don't like how you're doing this. We're going to change the dynamics. And then it's certainly not capitalism, right, where you just let a company go. I mean, do we as investors need to understand that that's potentially the future?
That absolutely is a risk that investors take in certain sectors of the Chinese economy. Beijing has always told us that it's illegal for foreign investors to invest in telecom companies, internet companies, all these other online activities. It is against Chinese law to do that. So these people that set up these variable interest entities, VIEs, which have all been in the news, which is corporate structures out of the Cayman Islands that are connected to a Chinese company, but you're not actually investing in the company itself. Those are inconsistent with Chinese law, and investors should not rely on those being stable. You're absolutely right that they may change the way that they treat a certain company or an industry in the future, but they will tell you many, many times before they do that what they're going to do. You simply have to listen to what Beijing's saying, and rest assured they're going to do what they say.
Hey, David, I was going through your notes that our producer Paul Brennan sent to us ahead of your visit with us, and I was struck by something, that only 7% of Chinese households own equities. Talk to us a little bit about why that's important, especially when it comes to the way that the country thinks about helping out publicly traded companies.
Absolutely. I think it highlights the fact that Beijing really doesn't care that much about the outlook for public companies, and they don't actually care that much about foreign investors either. They feel like they're in a position where they've got enough capital, they've got enough savings, they've got enough domestic liquidity to support their industries, and they don't have to rely on investors in New York or London or anywhere around the world. They also have now pretty much full control of operations in Hong Kong, so they can encourage companies to delist from foreign markets and list in Hong Kong, list in Shanghai, somewhere where they are more in control of the rules. So China has been very clear about this over time. They want Shanghai in particular to be a global financial hub. So watch for it in the next 2, 5, and 10 years, a migration of Chinese capital markets activity back towards markets that Beijing controls, including Shanghai and Hong Kong.
So, David, is there a point where instead of Chinese companies clamoring to be on, let's say, U.S. exchanges, we have U.S. companies clamoring to be on Hong Kong and other exchanges?
Absolutely. I think companies that have domestic operations in China are already showing their willingness to do that with dual listings, maybe having a listing in Hong Kong, and certainly talking about listing in Shanghai. The one thing we can be sure of is that you are not going to see Chinese companies listed in New York the way that they have been in the past. The SEC's made it clear that the quote-unquote clock is ticking on these listings getting delisted, and Beijing has made it clear that they don't want that transparency into the auditing and inside workings of Chinese companies, and so they will not stand for what the SEC is demanding, which is full, comprehensive audits of U.S.-listed companies.
What does that mean for the financial might of China versus the U.S. going forward? And just got about 30 seconds.
China's going to continue to build up their own strength. They really are not very concerned about foreign investors. They're not even all that concerned about equity investors, and they're going to keep bringing stuff home so they can control it better. I would be wary of a lot of sectors of China that people have gotten comfortable investing in because Beijing doesn't want them there.
All right. Fascinating as always. David, thank you so much. Come back real soon. David Riedel, he's president and founder of Riedel Research Group. You can find him certainly online as well and check out what their company is. They're research analysts. They're on the ground in about 15 countries around the world, and they are making recommendations on hundreds of companies. So great to have David with us on the phone from San Francisco.
Well, let's head from San Francisco to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Senate Republican leader Mitch McConnell says a solution has been reached with Majority Leader Chuck Schumer that allows Democrats to raise the debt limit with a majority vote. The House tonight will vote on legislation that would allow the simple majority vote threshold. No timing yet for the Senate vote. Hospital admissions in South Africa have more than doubled in the past 24 hours. That's the country where the Omicron variant was first detected. Here at home, the nation's top infectious disease expert, Dr. Anthony Fauci, says it's still early, but Omicron does not seem to cause severe illness.
It appears that with the cases that are seen, we are not seeing a very severe profile of disease. In fact, it might be, and I underscore might, be less severe.
Fauci says there does appear to be evidence for those who've already had COVID-19. They're more likely to become reinfected with the Omicron variant than with the Beta or Delta variant. There's more work to do to improve the U.S. Capitol Police after the January 6th attack. That urgent message from Michael Bolton, the Inspector General of the Capitol Police. He testified today before the Senate Rules Committee.
Although the department has addressed some of our recommendations and have made security improvements throughout the Capitol complex, much work still needs to be addressed in relation to training, intelligence, cultural change, and operational planning.
Bolton says his office plans to release a final report in relation to January 6th in the next few days. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So great conversation with David Riedel, just talking about investing in Chinese stocks and really just kind of laying out the groundwork of how China wants all of their domestic companies listed on, their own Chinese exchanges and doesn't really care about foreign investment involvement. So it's kind of interesting to see this continuation, I feel like, of a division of the world. At the same time, there's a story about China reacting to the U.S. saying it's not going to send any diplomats to the Winter Olympics in China.
Yeah, China's warning that the U.S. will, quote, pay a price for boycotting the Olympics. China has threatened the U.S. with retaliation against its decision to declare a diplomatic boycott of the Winter Olympics, warning that ties between the world's two largest economies, they may suffer.
It's complicated. And, you know the argument. You listen to our program, hear a lot of our guests, and, companies, leaders, countries taking a stand against what they would say are injustices that are happening in China specifically. And so you do wonder, where do you step up, draw a line, right, and take a stand? And employees of companies are increasingly asking their leaders to do so, whether it's government leaders or company leaders.
But I do want to put the United States move into perspective. This is not a ban of the Olympics.
No,
this is not
athletes
a ban
will be
from
there.
Americans going to the Olympics or athletes being at the Olympics. This is a diplomatic ban. So the U.S. could have gone a lot further.
It's a complicated relationship, and we're increasingly seeing it going there between the U.S. and China. We do also want to mention, because it's a personal story for us too, Hayes Fan is a member of Bloomberg News Bureau in Beijing, has been detained since late last year with no information forthcoming on her case. She was last seen on Monday, December 7, 2020, being escorted from her apartment building by plainclothes security officials. Chinese officials said at the time that she was detained by the Beijing National Security Bureau on suspicion of national security law violations. But, we are seeing journalists, not only our own, but certainly that is near and dear to us, that are detained over in China. And often it's for reporting on what's going on in the country.
Yeah, and we'll continue to bring you updates on all of this here at Bloomberg.
All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Biggest stock market rally since March. Lots going on today. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are adding to yesterday's gains, with the Dow currently up 521 points. S&P's gained 94, and NASDAQ is higher by 445. The U.S. 10-year yield at 1.48%. Gold is up 6. Oil climbs. And Bitcoin is trading higher by 1.6%. Among the main 11 S&P sectors, all were in the green, led by gains in tech, consumer discretionary, and energy. And leaders said the upside in the Dow, American Express, Salesforce, and Intel, while Merck fell 1.9% and led to the downside. In U.S. politics, McConnell said a deal was reached with Schumer on raising the debt limit. And regarding the virus, Fauci says the Omicron variant is almost certainly not more severe than Delta. After earnings, Aero Environment plunged 28% intraday. And in other news, Comcast fell intraday after it gave an EBITDA growth outlook that was below estimates. Wrapping things up, Toll Brothers reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg, type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie. Hey, thank you. Carol Massar, Tim Stanovic, we're in our interactive brokers studio right here on Bloomberg Business Week. What?
It's Tuesday.
It's Tuesday, Lemon. Only Tuesday. Hey, it was once the biggest U.S. mutual fund and the most well-known. It was run by one of the most iconic fund managers, really, of our time. We're talking about Peter Lynch, former Fidelity Magellan fund manager. This story, by the way, among our most read on the Bloomberg. He caught up with Bloomberg's Tom Maroney and Joe Shortsleeve. He talked about passive investing.
This is very measurable. Our fund managers, our active guys have beaten the hell out of the market for 10, 20, 30 years. I think they'll keep doing it. So I think this move to passive is a mistake.
So passive is a mistake. That is, of course, Peter Lynch, formerly of Fidelity Magellan. Let's talk about this with our Bloomberg News senior editor, Chris Ansey. He's with us from our Boston bureau. First of all, Chris, I think it's safe to say there might be a generation out there that don't remember what it's like to have high inflation, to see a bear market, or to hear from the likes of Peter Lynch, who's been pretty quiet for a long time. He doesn't talk a lot.
Well, that's true. He retired at the ripe old age of 46. In fact,
that's amazing.
Back in 1990, and as you say, he's been pretty private. And in fact, this chat that we had with him was on the occasion of his giving a gift to his alma mater, Boston College. So it really wasn't kind of investment focused by any means. But you're right. I mean, he's probably not particularly well known, among younger generations. Certainly for anyone who invests their pension funds or education savings accounts in mutual funds these days, they probably would not be doing it without the way that Peter Lynch popularized not just his own Magellan fund, but mutual funds overall back in the 1970s and 80s.
Right. There was a time when mutual funds were a new thing. What's funny is, and you talk about how he's not known to probably a younger generation. I did a story over 20, 25, 30 years ago, long time, and interviewed Peter Lynch. It was about kids doing investment clubs, and Peter Lynch would talk to them and he loved talking to kids because he said they would say, well, I like, for instance, I'm just throwing this out there, Nike, because I like their sneakers and I get it. Like, it was his thinking about why he liked the companies. It was very sometimes simple, fundamental. It was a brand somebody could understand.
Well, that's right. And it was the opposite of kind of passive investing, just buying and holding an index fund. Now, the world was also different at that time. There was, the Magellan fund that he took over was quite small in 1977. It was less than $100 million. And so, he could go in and buy stakes in companies that he liked and it wouldn't move the market. But mutual funds these days are so enormous that it's all that much more difficult to beat the market because as soon as somebody sees what you're doing, it's going to affect the price.
Right.
So not able to do that, it's a different game.
Well, Chris, he did cite three current Fidelity managers: Steve Weimer of the Growth Company Fund, Will Danoff of the Contra Fund, and then Joel Tillinghast, who's going to retire from the low-price stock fund, as proof of why active can still beat passive. My question, though, is does this include management fees? Because that's a big part of this.
Well, actually, we have a handy-dandy little function on the Bloomberg terminal that allows you to easily see, total returns over time. And I just did a little fact-checking on Mr. Lynch, and indeed, two of those three funds that he mentioned, in fact, did beat the S&P 500 over the past 10 years, as did his old Magellan fund, in fact. Now, the low-price stock fund did not, value stocks, low-price stocks have not been in vogue, not been doing particularly well the past decade. But over 20 years, those three funds, Contra Fund, Growth Company Fund, low-price stock fund, they all handily beat the market over a two-decade time frame.
Well, it's interesting, too, and I think about the story we talked with our Justina Lee, who's got a story in Bloomberg Business Week about how now we're seeing investment giants kind of racing to offer investors the opportunity to create a unique index, so they can, either take an index that exists and kind of tinker with it so that it has the companies they really want to invest in. And it almost feels like, to some extent, we're seeing this, okay, some passive, but let's also actively get involved because we can see how that can lead to outperformance, Chris.
Well, and then there's the whole Robin Hood frenzy, right?
Right.
I mean, I guess the proviso is that the vast majority of fund managers do not beat the market. That's and indeed, you look at where BlackRock is today. BlackRock's assets under management more than double that of Fidelity. I'm not sure they were even around in the 80s, and they have ridden index funds along the way to their success.
Well, very cool story. Great reporting by our team there in Boston. And if you want to find out a little bit more, too, about what Peter Lynch is donating to his alma mater, you can check out that story. It is on the Bloomberg and at Bloomberg.com. Chris Yancey, thank you so much. Senior editor at Bloomberg News, on the phone from our Boston bureau. Coming up, the chart of the day.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We're rolling over a little bit on the market.
Are we?
We're rallying, but we're coming off our highs. Just
Your standards are so high.
They absolutely are. Ask my husband. It's a really tough place to be.
What more do you want? It's like a straight line going to the right.
All righty. We're going to talk about...
There is no winning with Carol Massar.
Really tough. We're going to get to the chart of the day. Kriti Gupta, she's, I think, a little tough too, but we'll bring her in just a moment.
In the meantime, a check of that trading day with the latest. Here's Charlie Pellet.
Thank you very much. 28 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all advancing, but as Carol says, yes, off the session high right now. Right to the numbers. We'll give you the why in a moment here with the S&P up 86 now, up 1.9%. The Dow up 442, up 1.3%. At one point, we did have the Dow up more than 520. NASDAQ up now by 422 points for the NASDAQ Composite Index. That is a gain right now of 2.8%. NASDAQ 100 Index up 2.7%, while the Russell 2000 up now by 2.5%. Stocks are staging the biggest rally since March. Major averages advancing on optimism that the coronavirus variant will not derail global growth. Treasuries fell with the 10-year down 14 seconds. 10-year yield right now 1.48%. Spot gold up 0.4%, up $6 the ounce to $17.85. West Texas Intermediate crude up now by 3.1%, $71.64 a barrel. GlaxoSmithKline says research shows its COVID-19 antibody treatment is effective against the full combination of mutations in the new Omicron variant. Well, one of the big questions is just how severe the variant is and how seasonal factors might come into play. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
Well, I do think that coronaviruses are going to ultimately end up becoming seasonal because all of the other ones do. This one just takes some time to get to seasonality because there's not enough immunity in the population. But I do think we will see intensification of spread when it gets colder, when people move indoors, and when spread of the virus is more efficient.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track every day at this time, Pfizer up 0.2%. Its German partner BioNTech rallying 7%. Those are the ADRs. ADRs of AstraZeneca down 1.4%. Moderna is up now by 6.1%. Johnson & Johnson little changed, up less than 0.1%. Recapping stocks rally, S&P up 86, up 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we are just about 25 minutes away from the close of U.S. trading. And
Rolling over.
We are rolling over a little bit. Depends on your definition of that.
It's rolling over.
Okay, I agree. Carol's right. Carol's right. Well, let's get the chart of the day from Bloomberg Markets correspondent Kriti Gupta. Kriti, it's all about China today.
It's all about China. Decided to think tech, but to think global tech. And China has had a really gruff go of it lately with the regulatory scrutiny across really all of Chinese tech. I mean, the motivation here is that Beijing wants to bring some of that tech that they're creating at home that then is somehow brought to the United States to list here for the fundraising. They want to keep that within their own borders, and they want to attract the investment that comes with it. And in trying to do that, what it's ended up resulting in is a lot of these companies like Alibaba, like Didi, like JD, essentially these e-commerce companies from China, well, they've sank by a pretty significant margin. The Hang Seng Index lower by over 20% since mid-February. If you look at the Chinese ADRs, the Nasdaq Golden Dragon Index down by over 50%. So a lot of pain.
I love this story, yeah.
A lot of pain, but there is a silver lining. In doing that, it's created this kind of valuation that you aren't seeing in a lot of other global tech, because China used to be really expensive to enter and you were paying a premium. Now those valuations have dropped to almost equal to the rest of global tech, which begs the question, is it investable again despite having that risk? And that's what my chart of the day really illustrates, this idea that those valuations are coming back down to earth and that this might be a reason for people to hop back into China.
Certainly less expensive than they used to be, right? And if you do it, I guess this gets back to, I loved what you said earlier about what we're seeing in the market move today. How much is technical versus there's also some fundamental stories. And if you believe in these fundamental stories of these Chinese companies, now that we're having more clarity about where they can trade, who can be involved, then you can maybe start to think about the path forward. And if you believe in their fundamental story, then you can make an investment.
Yeah, and today was great because the case for China got a little bit stronger today.
Tim's going, maybe.
China came out with record exports, record imports, so they are growing on a fundamental level. You are also seeing their kind of consumption, their production patterns also rise as well. So is China the place to be right now? Well, kinda. It's still growing, so maybe this might be the time to hop in.
I'm thinking of our conversation with David Riedel.
That's what I was thinking of. That's why I said maybe.
You pointed out the small amount of Chinese investors that are actually in the Chinese stock market.
7% of people
Chinese investors in the Chinese stock market.
Are actually own equities.
Which is interesting because in 2015 they
this
had
is
that
according
whole
to
retail
David Riedel.
mania. Yeah, well in 2015 they had the whole retail mania where most of Chinese stocks are owned by the people.
Right, but we've often talked about that property is a bigger part of Chinese individuals in terms of their wealth. I guess what I'm curious about is these Chinese assets, who are these Chinese companies that ultimately will be listed on Chinese exchanges, probably Hong Kong, right, and what have you. Is there enough investor momentum, I guess, in Asia to support them if the rest of the investment world isn't involved? If they don't trust the fundamental stories of these companies because the Chinese government can get involved.
Yeah, well, you nailed it because there's only a certain amount of capital, right? There's only a finite amount of capital. And so far, the way it's played out is that as money has come out of China with this kind of crackdown, it's gone straight into U.S. tech. And it's been a major foreign bid that's kind of powered the momentum behind Apple, Amazon, et cetera, and therefore the S&P 500. So the question is, if there is that investor momentum, and I don't have the answer to that, there may not be, there might be, to hop back into that part of the world specifically for EM exposure as we talk about recovering from COVID, but also for that tech exposure, the money could actually be coming out of U.S. tech in the other way. So that's the way to kind of think about it and bring it home.
Hey, how's day 4 going?
How's day 4 going? Good until you asked me that question, Tim.
You weren't expecting it, right?
Day 4 is great. I'm very lucky in that I have a really good readership, which is great. That Dave Wilson left behind. I'm very supportive.
One reason I asked you is because as you were doing this, I was thinking, oh my God, that's so much pressure to come up with a chart of every single day.
A chart
that is going to be engaging.
That Tom Keene has to approve.
I did. You know what? I did hear you and see you on Bloomberg Television earlier today talking to Tom Keene and the surveillance crew about this. So I got a nice little preview. Very early, by the way.
Is that cheating, Tim?
No, it's not cheating. I'm watching throughout the day.
I like it. I think that watching the Chinese market and watching what's happening with these companies that have been so much a part of our investment world, right? And we've all been equally anticipating when they IPO, when they have access here in the U.S. markets. It'll be interesting to see whether or not things calm down, and then the fundamental stories become a bigger part of drawing in investment flows. Great chart. Thank you.
Thank you.
Kriti Gupta with the chart of the day.
Well, let's get to check the latest world and national news. From New York to D.C., here's Nancy Lyons with the latest. Hey, Nance.
Thanks, Tim. President Biden is making it crystal clear to Russian President Vladimir Putin the U.S. will take action if Russia invades Ukraine. The two leaders spoke today for about 2 hours. National Security Advisor Jake Sullivan with specifics on President Biden's approach.
He reiterated America's support for Ukraine's sovereignty and territorial integrity. He told President Putin directly that if Russia further invades Ukraine, the United States and our European allies would respond with strong economic measures.
Sullivan says Biden offered an alternative to Putin, de-escalation and diplomacy. Biden has also debriefed European leaders about their discussion. As the Special House Committee continues its efforts to obtain testimony from Trump administration officials concerning the insurrection, members learned today White House Chief of Staff Mark Meadows has backed out of his agreement to cooperate. And the Senate committee that oversees the Capitol heard from the Inspector General who investigated the lack of preparedness of Capitol Police on January 6th.
Since the insurrection caught the police leadership by surprise, Michael Bolton said, intelligence analysts have been hired, but an experienced director of intelligence not yet.
Intelligence
Intelligence Division analysts are attending roll calls, providing briefings to the officers. So they are now receiving daily briefings and receiving the appropriate threat assessments. They really need to put a lot of resources into the intelligence.
Bolton said some 200 Capitol cops have left the force this year, and it's looking at hiring contractors to handle security screening at the entrances to the buildings. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. Carol Masser, Tim Stanovic in our Bloomberg Interactive Brokers studio. And this is a story about a Bitcoin investing giant slamming bond markets as a Ponzi scheme.
Check this one out. This is from our own Shonali Basak, who right now is co-anchoring The Close on Bloomberg TV. She writes about Dan Moorhead. Yeah, we're going to talk to her in just a few minutes. The CEO of Pantera Capital and longtime macro investor sounded an alarm on what he called bubbles created by the Federal Reserve's efforts and says that digital assets should be bought instead.
All right, so here's what he said. Bond investors, quote, are going to get absolutely destroyed when the Fed stops manipulating the bond market. He put out a note today, Moorhead arguing that Bitcoin and crypto assets could be a hedge as bubbles and debt markets begin to pop.
Quote, governments should stop obsessing about Bitcoin and look inward, he wrote. The biggest Ponzi scheme in history is the U.S. government and mortgage bond market. 33 trillion with a T dollars, and I'm reading from his quote here,
right,
all being driven by one non-economic actor with a dominant position who is trading based on material, non-public information.
I don't know that we can call him. I don't know that we can call him a tiger cub, but he was an executive at Julian Robertson's Tiger Management earlier in his career. He started Pantera's first fund in 2013 to invest in cryptocurrency. So some would say he's talking his book.
Guess how much Bitcoin traded for?
At that
you
point,
just read ahead.
I know. I'm not going to.
You already read this story.
But
so
you know, I know it's 8 years ago, and Bitcoin in particular, was a lot cheaper.
$65.
We all
coin.
like our, kicking ourselves.
Get your time machine out. Get back there and buy some Bitcoin for $65.
Oh, that it were true. Because you know what? Let's see. The digital currency hitting an all-time high of nearly 69,000. You might remember that was just last month. He now invests in an array of digital assets. His firm has $6.4 billion in assets under management, according to its website. So. Yeah, but he's in this world, but he believes in it, so that's okay too.
Yeah, and look, he echoed comments as Shonali writes that Scott Minerd has made. He made a similar reference in early 2020 before the recent actions taken by monetary authorities around the world to stem the financial wreckage brought on by the coronavirus pandemic.
It's the thing, time will tell. In 5 years, where are we when it comes to Bitcoin and some other cryptocurrencies?
Get out the time machine. Tell us.
Again, go forward, go back. This is Bloomberg.
breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off session highs, but the Dow, the S&P, NASDAQ all rallying. We're looking at the biggest stock market gains since March. S&P up now by 1.8%, up 81 points. The Dow had been up more than 500, up now by 404, up again by 1.1%. NASDAQ up 409 points, up now by 2.7%. The NASDAQ 100 index up 2.7%. Russell 2000 up by 2.2%. 10-year down 11/30 seconds. 10-year yield right now 1.47%. Stocks have staged the biggest rally since March. On optimism, the Omicron variant will not derail global growth. Gold up right now by 0.4%, $17.86 the ounce. West Texas Intermediate crude up 3%, $71.55 a barrel. Among some of the companies reporting earnings after the closing bell, Toll Brothers up now by 0.1%. Also reporting ChargePoint Holdings up now by 4.3%. Stitch Fix also reporting after the bell up by 5.9%. Recapping a rally underway, S&P up 81, up 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
As the Omicron variant spreads around the globe, one thing is clear. The longer vaccines remain scarce in developing countries, the more likely it is that new coronavirus strains will emerge. Unfortunately, almost no low-income nations are on track to meet the World Health Organization's year-end vaccination goal. Among the 92 countries covered by the WHO's COVAX initiative, the median vaccination rate is only 14%. This is unacceptable. Rich country governments must ship out their vaccine donations more quickly. They should also let poor nations take their place in vaccine delivery queues, so doses can go where they're needed most. And they should act now to head off a syringe shortage that could undercut global vaccination efforts in 2022. As scientists race to learn more about Omicron, governments must move just as fast to close the inoculation gap. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 minutes left in today's trading session, so we're getting ready to count you down to the closing bell. We're going to join our TV team in just a moment. In the meantime, yep, we are up. Certainly a risk-on trade. We're just rolling over. Don't give me junk for saying that.
I mean, it depends on the definition.
It's a rally, but I'm
over.
just trying to say we're coming off our best levels of the session.
Still looking at, 2.6% higher on the NASDAQ composite.
All right. Ken Van Leeuwen is with us, founder and chief executive officer of Van Leeuwen & Company. He's on the phone from Princeton, New Jersey. Hey, Ken, nice to have you here on Bloomberg Business Week on Bloomberg Radio. How are you?
Great, Carol. Thank you. Thanks for having me.
Well, it's great to have you here. You're a wealth management firm. I'm curious how you see these markets. Opportunities, or do the run-up that we've seen give you reason to pause?
Well, one of the things is, right, isn't it amazing what a couple of days the difference makes? Last week, we thought we were going to fall apart, and the first 2 days of this week, it's a whole different story. We definitely see markets headed higher from here. I don't know if we're going to see what we were seeing yesterday and today, but we definitely look at definitely seeing some markets move up because there's some strength in some different areas of the marketplace today that we actually haven't seen for a while, and that's giving us great hope, actually.
Well, what's really interesting, too, and I wish I was the one who came up with this, but Alex Wittenberg and our Cameron Cries making some comments on the Markets Live blog here at Bloomberg. Cameron writing specifically, equities have already forgotten Powell's hawkish comments. It was just last Tuesday, right? And I look at where we opened that day and where we are today. We're about 5 points above it. So, all right, had my tantrum. I'm okay.
Well, we're actually still, because we're watching closely that meeting next week on the 14th and 15th.
Yeah.
Because, we do have to take Mr. Powell's word for it. He is going to eliminate the word transitory finally, and that, inflation is here. We're also seeing whether the minutes after this meeting is going to detail how he's going to probably want to raise rates earlier. We thought September of last year, but now we're thinking maybe as early as May. So that could give the market a little bit of a concern as well as we head into the final couple trading days. And remember, we've still got that overhang for people who have losses, doing some tax loss selling as well. So there could be a little bit of the tide in certain stocks against us.
You did see that, or you did just say that we definitely see markets heading higher from here. What's your time frame for that, and how much higher, and what's the catalyst that brings them higher?
Well, I think one of the things is, again, there's still a lot of money in the system. We still, frankly, see the last 2 weeks here, the remainder of this week and next week, going higher from here. People have to put money to work. I think Bank of America reported that last week, or that they saw the largest inflow of money into equity mutual funds that they've seen in quite a while. So that gives us some thought, too, is that people feel they're missing out on a little bit of this price movement that we're seeing.
Yeah.
So they're going to start to put some money to work.
Well, we had Barclays and UBS coming out saying neither the Fed nor the virus will derail this rally. Do you agree that we might have some moments of pause, but for the most part, because there's growth, because we continue to move towards a recovery out of this pandemic, yes, there will be variance, but we've got a bag of tools to figure out how to deal with it, that it makes sense for the equity market in particular to continue to move higher, at least in the United States and perhaps elsewhere?
Sure. I mean, I think one of the things is that we're learning a little bit, Carol, is that what we're seeing is that, we saw this with all the different variants as they come around. Yes, of course, they're not good and they do harm people, but what we're seeing is that every time we see one, it's actually then discounted after a period of time. Because basically, again, as you mentioned, in the U.S., a good percentage of us are vaccinated, while not necessarily in the rest of the world. But we do see these variants becoming less and less of an economic concern, especially as we go through the beginning part of 2022.
Is this just something we're going to have to get used to when we see a new variant? And I asked that question in the context of our investor audience. Like, how should they be thinking about this?
Well, see, I think, Tim, what's going to happen, right, is that I think that, first of all, that Friday after Thanksgiving is when we heard about the Omicron. Of course, that Friday after Thanksgiving is a very lackluster day to begin with, so it was very interesting that we heard the news that day. Liquidity is very low. The market closes at 1 o'clock. And then the fear just continued to build over the weekend. But I totally agree with what you're saying. I think we're going to learn to deal. We're going to learn to deal financially with all of these various strains as we begin to see them. So this will be our third now. So I think slowly over time, the market will begin to realize that, and people will start to put money to work if we see pullbacks for opportunities.
Hey, Ken, so, okay, I agree that the Fed meeting next week, and we're going to start, we already are counting down to it at this point. We're in a blackout period, right, and Fed officials we won't be hearing from, so.
But we can talk about it.
We can talk about it, but when the Fed officials come, like,
all day long.
what Jay Powell says at that meeting is going to be crucial in terms of investor psyche. What would be the big surprise for you out of that meeting? And what would be a big disappointment out of that meeting?
The big surprise would be that he says something. Right now, I think the market is thinking that we're going to get probably some type of interest rate increase in May. I think if he says something in the first quarter, or the potential for doing that, or a dramatic tightening, that I think is something that could cause us to be, have a little bit of a pause here. I don't think he's going to say that, especially as we're going into the latter part of the year. We're almost done, for lack of a better word.
Right.
But that's what we're looking
at that point.
I think also, there's a
just really quickly, just got about 15 seconds.
Yeah. So I think that's the surprise if he believes that interest rates are going to increase before May.
All right. Got to run. Thank you so much, and look forward to having you join us again. Ken Van Leeuwen, founder and chief executive officer of Van Leeuwen & Company, on the phone from Princeton, New Jersey. This, as I mentioned, we did see those major market averages coming off their highs of the session. We've now taken another leg up, but we're still just below those best levels. But nonetheless, a 2% rally on the S&P, 1.3% higher on the Dow, and up 2.8% on the NASDAQ. Time to head over to our TV team for Beyond the Bell, live on radio, TV, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Sonali Bassick in for Caroline Hyde. Counting you down to the closing bell on this Tuesday afternoon. Here to help take us beyond the bell, it's our global simulcast partners, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and I'm told YouTube audiences. Carol, a rebound day here. S&P 500 up a solid 2% on the day. The outperformer, though, the NASDAQ Composite up almost 3%.
Yeah, absolutely. When you look at the major U.S. equity averages, I'm also watching the NASDAQ Golden Dragon China Index, because that's up about 4.3%, just off its highs of the days. But nonetheless, it seems like China is easing a little bit, concerned about growth, making sure that there are some policies in place, and we are seeing some of those Chinese stocks after a lot of uncertainty over the past few months. Certainly investors, Tim, finding them interesting again.
We saw just a little bit of a tick lower, especially when it came to some of the individual names when it comes to reopening, like airlines, for example, cruise companies, that were positive until late in the afternoon when we saw a headline about the Pfizer vaccine's efficacy about the Omicron variant. A lot of those shares are now lower on the day today.
Yeah, it's interesting. A lot of good news today. We have that news about the debt ceiling as well coming out of Washington. The idea that it very well might be staved off into next year. And, that Pfizer news, as you were talking about, too. We're very close to record highs on the S&P, but, that was even before these headlines came to fore.
And it's so funny when we think about the intersection of Fed and D.C. and Fed policy, and then, of course, the virus. It was two big notable investment banks, UBS and Barclays, saying that those two even together are not enough to sort of derail the recovery, and where we are on sort of this equity liftoff kind of day, Romaine.
All right, closing bells here on this Tuesday afternoon. An update here for the Dow Jones Industrial Average, up about 1.4%. The S&P 500 up about 2% here. Looks like it's going to close right around 46.86 here. That record high is 47.04 and a half from a couple of weeks ago here. Still, this is going to be the best day that we've seen on the S&P, I believe, going back to March. We'll double check that for you, though. The NASDAQ definitely having its best days in March. And I think this is interesting. This is actually the biggest outperformance we've seen by the NASDAQ Composite versus S&P 500 since at least March 31st. Up 3% here on the day, 461 points, 15,686. As far as those small cap cyclicals, well, they got in on the party as well. The Russell 2000 higher on the day by about 2.3%, 2253, Carol, and change right now is your closing number on the Russell.
Yeah, and the NASDAQ can send a thank you card to the chip stocks because, man, they have definitely been an outperformer. I mean, take NVIDIA, the top in the Philadelphia Semiconductor Index, which overall was up, 5% on the day today. NVIDIA making up 5.2% of the NASDAQ 100. So that explains to some extent some of the outperformance in a big way, Taylor, when it looks at the tech players, those chip stocks really pushing stocks higher.
So let's go there. Let's do that for our radio audiences. We do every day, the sector winners and the sector losers. It is all green on the screen except for one tiny loser at the bottom. Let's start with the gainers because, Carol, you really sort of nailed it on the head there, right? How much of this is some of the semiconductor equipment, auto components, technology, software? Am I sensing a theme here? You're up 2.6 to more than 5% for some of those sectors on the day in the S&P. The only loser at the bottom is some of the telecom services. And Rain, you've been talking here about some of the slowing growth with a few of those down in the red, off about 0.4%, Carol.
All right, I'm going to stay with the tech theme here, if I may, and Chinese, kind of melding them together. Alibaba, this one was at its highs up about 4.7% today. By the close, up about 1.4%. But earlier throughout the session, session having its best day since about 2017, leading rebound among those Chinese tech stocks in particular, really those bargain hunters piling in after Beijing's move to really bolster the economy. There's also news of a fresh CFO at Alibaba, and also the company's core commerce division, a little bit of a shakeup there, and that definitely caught investor attention. Citi also coming out saying the developments as positive, reiterating their buy on the stock with a price target of $234 a share. Stock right now at $125 and change. So talk about some optimism there. Another Chinese company.
We should point out, just sorry to interrupt, Pinduoduo. That's your biggest mover in the NASDAQ 100 today.
Yeah, exactly. Right. So really a lot of momentum there. Another Chinese company. I'm not sure I'm going to say it, so maybe one of you guys can help me out. Pinduoduo. Am I saying it right?
Pinduoduo. I just said that.
Oh, you did? Oh, you did? Okay.
Yeah.
All right.
You don't have to pay attention to me.
Okay, I won't. It's up 12.5% in today's session, pretty much closing at its highs. It, too, was top in the NASDAQ 100. I always listen to you, Romaine. Among the 27 U.S.-listed Chinese companies that could apply for secondary listings in Hong Kong, according to Goldman Sachs, so they have been focusing on those companies in particular. And then Marvell Technology, also top in the NASDAQ 100, up about 7% here, announcing that it will ship its 5 billionth hard disk drive controller next month, rated new outperform at KGI Securities, a price target of 105, stock closing at about 91.
And I'm just going to add a couple to that board. Just we should flag Apple did close at a record high today, up 3.5%. NVIDIA up 8% here on the day. Tesla also getting a nice bid, up 4%, Tim.
Yeah, Apple. Thank you, Katie Huberty at Morgan Stanley, for that note early this morning. Let's talk about decliners. Gave you a little preview of these earlier in the day, but because they are the top percentage decliners in the S&P 500, worth checking in right now. Comcast lower by 5.29%, leading cable stocks lower as well. Charter down by 3.3%. The story there is concerns about broadband subscriber growth. We heard that from a Comcast executive early today at a UBS conference. Rivian, I want to check in on this one, finishing the day down by 0.5 percentage point. Interestingly enough, yesterday shares of Rivian ripped higher by more than 11% after a handful of analysts came out in a really positive way, saying that, hey, Rivian really can compete with Tesla. So wanted to check in today, down just about 0.5 percentage point, guys.
Let's take a look at yields, because when we talk about some of the big tech gainers on the day, typically, you guys, that comes with yields falling. But what was so interesting is you actually had sort of a similar rate of change kind of day, at least on the short end. Yields are up 5 basis points to 69. And Carol, I was joking earlier with Romaine that we started this year at 10 basis points. So we're now up to about 69. So you're pricing in effectively 60 basis points of moves on the front end. And you had a decent 3-year bond auction today. I rounded out back up finally to a 180 on the 30-year and a 10-year to 147. But it's so interesting, Carol, and I'll sort of kick this off with where we're going, is sort of what that means for these longer-term growth and inflation expectations. It was our 3 o'clock guest, Anwita, who said, be careful. This may not be all technical. This could be fundamental if we're thinking about maybe a Fed that is tackling inflation out on the horizon.
Well, and this is what we're going to get some clarity on next week, right? Our focus, and I feel like you guys, we're going to be counting down to that Fed meeting next week, and you'll maybe see some markets calming down ahead of that, awaiting to see what Jay Powell will say. We just had on Ken Van Leeuwen, who runs his own company, a wealth management firm, and he said, I'm like, any surprises? And he said, if Jay Powell comes out and talks about being a little hotter when it comes to interest rate increases, he doesn't necessarily expect it, but that would be something that would certainly get market attention. We'll see whether Jay Powell plays it safe, Tim, or whether he's more aggressive potentially.
Well, earlier than that, we're going to get inflation data on Friday. And I know it's not the preferred measure of inflation that the Fed actually uses, but I wonder, Romaine, how that changes the story. If we do say the hottest read in years, which we could see even excluding
it changes the story.
oil.
Look, anyone who's dismissing this number, even to talk about it from a transitory perspective, I think is a little disingenuous. When you start talking about 6.8, we should point out 6.8 right now is the average of economists' estimates for the most recent month here. You start talking about some of the biggest year-over-year increases that we've seen in inflation going back to the early 80s, late 70s here, even without the extra bid from energy that we saw back in the 70s. But when you consider the slowdown or the potential slowdown in economic growth, a lot of folks have to start to say, how do you reprice? How do you revalue?
Yeah, how do you price? How do you change your portfolios with those kinds of expectations ahead of you? You have a lot of people slamming on the bond market today and the impact this will have on their bond portfolios. Where do you go instead?
Where do you go? You go into NFTs?
Yeah, well, that's a case that somebody makes.
Go into NFTs. Just ask the folks at Christie's and Sotheby's, man. Those NFTs selling for what? Millions of dollars. So, Tim, you wonder, where is a safe place at this point?
You're pretty tapped into that, Carol, right?
Yeah, totally. I've got a couple of NFTs. Would you like
Art is a hard asset.
I believe in
Not
art. I want to hang something on my wall.
We can hang an iPad with an NFT on your wall, Carol.
It's not the same.
No, it's not the same. It was interesting, though, today, I got to bring in crypto here because even though it was a risk-on day, we didn't see big moves, at least to the upside for Bitcoin. Still trading just around $50,000.
Yeah, but look, you talk about the big flash crash that we had over the weekend. The idea that you saw that sort of floor come back into this is what a lot of the crypto faithful have talked about here. You're going to have that volatility. It's basically built for volatility, but as long as you can start to feel out a floor for when these prices drop here, that gives some encouragement to some of these folks who want to remain.
I'm just not sure I want that volatility in my salary. I think we're going to have that conversation later.
Your salary?
Salary.
Oh, salary.
Yeah, great story on the Bloomberg.
You get paid, don't you, Carol?
Your retirement.
You're doing this
just in NFT.
I just do this because I like. Yeah, exactly. All right, guys, we got to run. That's going to do it for our cross-platform coverage. Our market wrap on this Tuesday with Bloomberg Radio, Bloomberg TV. Catch us again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I do feel like we're going to get to a point, and thanks to our TV colleagues, Taylor Shinali and Romaine there, because I do think we're going to get to a point. Yeah, that inflation report is important that we're going to get in terms of CPI. And I know I'm always like, it's not the favorite point.
But
the thing is, we know inflation's high.
Right, the 6.8% is the number that we're expecting to see. At least that's according to the economists surveyed by Bloomberg. Significantly lower when we take a look at excluding fuel and excluding energy and food. That's expected to come in at 4.9%.
I always find it interesting because it's like, yeah, let's back out food and energy. I don't know about you, but I got to feed my family and I got to fill up the gas tank.
Yeah, I do too.
I always love that. It's like, back it out.
And it doesn't.
But I understand because it can.
And look, we should, food and energy. Filling up your gas tank is only part of the energy story here.
Correct.
Right.
Heating your home.
Heating your home.
Gas to cook food.
But the cost of actually getting those goods to you, the goods and services to you. If everyone's paying more for getting those goods to you, then you're going to be paying more in return.
We talk about Fed meetings being so important. This is going to be an important one because we're going to have to see how Jay Powell. A lot of the data points did not take into the Omicron variant, and maybe it shouldn't because as we're seeing so far,
we know how to live.
Right, we know how to get through it, and so far it looks like maybe it won't be as bad as some of the other variants. But
still waiting on more data.
That FOMC meeting is going to be an important one in terms of the tone, the tenor, and if we get more clarity about what they're going to do with interest rates.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. President Biden warned Russian President Vladimir Putin today that the U.S. and its allies would take strong measures to respond to any attack on Ukraine. Russian troops have been massing along Ukraine's border. National Security Advisor Jake Sullivan says Biden also told Putin he has another choice: de-escalation and diplomacy.
The United States and our European allies would engage in a discussion that covers larger strategic issues, including our strategic concerns with Russia and Russia's strategic concerns.
Sullivan says the two leaders did agree to follow up on their discussion, but he gave no details. President Biden has debriefed European leaders on his 2-hour conversation with Putin. South Africa is reporting thousands of new Omicron cases daily as the new COVID variant spreads rapidly through that country. Cases have doubled in just the past 24 hours. And the top U.S. infectious disease expert, Dr. Anthony Fauci, says those cases reveal important information about the variant.
Hospital stay seems to be less, and the use of supplemental oxygen needs to be less.
Fauci says those who've recovered from COVID-19 appear to have a higher rate of reinfection with the Omicron variant rather than with Delta or other mutations. Republicans and Democrats in Congress have agreed on a plan to break a partisan impasse and raise the government's debt ceiling. I think this is in the best interest of the country, according to Senate GOP leader Mitch McConnell, who says the deal he struck with Senate Majority Leader Chuck Schumer would increase the debt limit with only Democratic votes. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. It's Tuesday, Lemon.
It is
Only
Tuesday for all of us. It certainly is.
We're just going to keep saying it. What?
Hey, just now on the simulcast that we did with our friends from Bloomberg TV, just a few minutes ago, Romaine Shonali and Taylor were talking about getting your salary in Bitcoin. So I wanted to bring this story to the attention of our listeners on Bloomberg Radio and our viewers on YouTube. You can check it out on the Bloomberg terminal and at Bloomberg.com. It's by Mr. Lena Igafopoulou and Claire Ballantyne, and they wrote all about the idea of what it's like to get your salary, as Eric Adams, the incoming mayor in New York City, our city here, has said he wants to do, when perhaps you wake up on Saturday morning and 20%, it's worth 20% less than it was the day before.
I mean, it's definitely recovered some.
Big sigh.
Yeah, it's recovered some ground, but it's still down. Bitcoin, 25% from the record high it reached just about a month ago. Think about it. Whoa.
Okay, so this, yeah.
Well, first of all, extreme volatility, risk reward. Like, this is what this is about.
Well, it raises a lot of questions. One, first of all, how do you actually get paid in cryptocurrency? You have some athletes and celebrities and you know, incoming mayor of New York City who want to do that. How much does it cost the organization to pay you if they have to buy the cryptocurrency to give to you? Or why not just use this money you get in your paycheck
to buy Bitcoin?
Yeah. Like the same way.
Buy as much as you want or not want.
Like the same way that, you know, perhaps if you invest in a retirement account, that a portion of your salary is taken out of there. Because as Katie Greifeld said, how am I going to go buy a soda if I get paid in Bitcoin?
Well, that's a good point. It's almost, okay, not apples to apples, but I think about like the EV universe, right? It's hard for you to have an EV some places because we just don't have the infrastructure to support.
No, I think that's a really good point. It's accessibility.
Right? Would you be paid? So Bloomberg comes up to you and say, Tim, love you.
No.
We'll pay you in Bitcoin.
I wouldn't do it.
Your wife would be like, no.
Yeah, I wouldn't do it. First, for a couple of reasons, but one of them is because it's not used right now. It's called a cryptocurrency, but it is not used in places like a currency. Things are not denominated in Bitcoin.
Well, we're still also debating, is it a currency? Is it a collectible? What exactly is
Digital gold?
Exactly. So we're still trying to figure it out. Yeah, I would say no. But yeah, if I want to invest in it, I will at my own free will.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stitch Fix shares are plunging after hours. Its second quarter net revenue forecast missed estimates. It sees second quarter net revenue in the range of $505 to $520 million. Estimates have been for $585 million, but again, Stitch Fix plunging after hours, down now by 20%. Stocks had the biggest rally in 9 months. Major averages did rally today on optimism. The Omicron variant will not derail global growth. Today we had the S&P up 95, up 2.1%. The Dow up 492, up 1.4%. NASDAQ rallied 461 points. That was a gain of 3%. 10-year down 13.30 seconds. 10-year yield 1.48%. Spot gold up 0.3%, 17.84 the ounce. West Texas Intermediate crude up 3.2%, 71.74 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie. Well, she is definitely in the room where it all happens. The comings and goings of the financial titans that we report on regularly. And on Monday, she was in a room with a large contingent of former and current Goldman Sachs execs at an event honoring Goldman Sachs, Stephanie Cohen, and also, just to put it out there, full transparency, Michael Bloomberg, the founder and majority owner of Bloomberg News parent, Bloomberg LP.
It's Amanda Gordon. She's Wealth Team reporter. I think it's fair to say
Best job.
Yeah, I was just going to say that, Carol. Pretty much the best job you can have here at Bloomberg, and she does a fantastic job with it, working late nights, I got to say. I mean, this was last night, and the story came out this morning, so you didn't get to have too much.
Was it last night? Was it Monday night? Oh, yesterday was Monday.
Yeah, it's only Tuesday.
It's only Tuesday, Lemon. Sorry.
I got to tell you, I have a few events lined up for the week still, so Monday night definitely kicks off the week with a bang.
You still get to have fun at these.
Well, I do,
You're
and
working.
especially, just to put this in context of the pandemic, this event has not taken place for 2 years. And Lloyd Blankfein joked that he had anxiety all along, like would he fit into the suit for this event?
Hello, we've all been there.
But he did fit it well, as I write in my story. And what I'm feeling coming back to these events actually touches on a point he made, which is that he doesn't naturally hang out with the New Yorkers who have been most hit by COVID and who have needs like job assistance and putting food on the table. And, generally the Wall Street dinner of this philanthropy is bringing people who've done well during the pandemic. I feel like these galas in New York, which are such a big part of business and culture and society, are where people can express some empathy and acknowledge that, this is a big city with a lot of different kinds of people, and we all depend on each other.
I wondered, Amanda, kind of what the tenor was of it, because I think about it even, too, coming out of the financial crisis, right? For a long time, there were no holiday parties, office parties, because a lot of people obviously got hurt during the financial crisis. I mean, the financial firms certainly felt it, too, but I do wonder, coming out of it, what was the mood? What were the conversations? Especially because we're still in the pandemic.
Well, I think that for young people, we've heard a lot about how it's been hard for them to be working from home, and there was a lot of motion behind getting them back to work so they could be mentored. With Lloyd Blankfein, the former head of Goldman Sachs, the MC and host of this dinner, I cannot tell you how many people wanted to go up and shake his hand and tell them about how their career is going at Goldman or elsewhere on Wall Street. And there was a sense that it really mattered to be in the room for that reason. I would say on the, UJA actually tries to keep things pretty slim on the trimmings for such a party because they want the money to go for the work. So I did notice some white Russian ice cream pops floating around. There was not a dinner. It wasn't, the halls weren't decked. And, the dress code was, pretty straight on. So I'm waiting for my crazy holiday bash to report on.
Well, that is pretty rare when it comes to these types of events that you cover, that they are bare bones, right? Because
it is. I mean, it varies. Every nonprofit would probably say that they mind costs, and there are some organizations where if there's a flourish, it might be flowers donated by a patron or by a fashion sponsor. So there are a lot of ways that these things get put together, and the the fact that even the people working in the hotel ballroom that night were happy to have jobs. We've talked about how they're always wearing masks and guests maybe aren't because they're eating and drinking. And I asked someone there who was serving those ice cream pops, by the way, how he felt about it. And, he said he's happy to be working and he doesn't mind at all. And when he's at a party, he takes his mask off, so.
Well, can I just read one quote, though, from Lloyd Blankfein? At the risk of being provocative and sounding tone deaf, I had a pretty good pandemic, and most of my friends who live in the same bubble as me had a pretty good pandemic, too, he said, but what about the rest of the world? So, and I feel like it mirrors what we talked about, Thomas Piketty.
Yeah.
Piketty. Just the incredible gaps there. The financial community did really well during the pandemic, and others did too, and the wealthier got wealthier, and those that are suffering really have had a tough time and continue. And this is an organization that really acknowledges and tries to help out those that are having a tough time.
Yes, we know that the world has changed because of COVID, and COVID might be around for a while, but with people have always done well on Wall Street, and the cycles are up and down. I think that there is a imperative kind of running through the events that I'm going to, and I heard it at Robinhood too, which is a similar framework where they support hundreds of nonprofits, that if you've done well, you really should make an effort to give back.
What were COVID protocols last night, and in general, how would you describe how COVID protocols have been?
So there's been a lot of confidence in the double vaccination and booster setup, and masking indoors, but taking your mask off only for eating and drinking. And that was the protocol.
There's a lot. The pictures though show a lot of people without masks.
That's why I said whoa.
Just gonna say,
but wasn't it dinner? It was a cocktail party where they were serving. So yes. So I actually kept my mask on a lot of the time.
Okay.
And other people do too. It's sometimes people take the mask off right when the camera comes for the picture.
Yeah. Okay.
And but I will say that protocol, if you have to show your vaccine card and you have to wear a mask at least while you're walking from one place to another, that has somehow given people a level of comfort with being in the room.
Yeah. Well, and we should also point out that this event raised $32 million, so a lot of money. Hey, check it out, everybody. Amanda Gordon, thank you so much for being here in our studio. Wealth Team reporter at Bloomberg News. Check her out on Twitter at Amanda Gordon, and check out her story at Bloomberg.com.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic in our Interactive Broker studio. We've got a pretty cool guest coming up.
We do. Jane Oates is president of Working Nation, also former assistant secretary of employment and training in the Obama administration. We've got a lot to chat about.
She's going to explain today's labor market to us and what we need, I hope. No pressure, Jane.
Right, she's with us in the studio, too, which is a very big deal.
All right, we'll get to her in just a moment.
In the meantime, a check of the trading day and how it ended up. Here's Charlie Pellet.
Hi, thank you very much. It was an up day, not just an up day. Biggest stock market rally since March, Tim. The Dow, the S&P, NASDAQ all advancing. Lots of earnings after the bell. Stitch Fix shares right now, they are plunging 17% after the clothing subscription company's forecast for second quarter revenue came in below the lowest analyst estimate. Toll Brothers reported earnings per share for the fourth quarter that beat the average analyst estimate. Toll Brothers shares up now by 0.8%. Biggest rally in 9 months for the U.S. stock market. Stocks rallied on optimism. The Omicron variant will not derail global growth. Ken Van Leeuwen is the CEO of Van Leeuwen and Company. And moments ago here on Bloomberg Business Week, he told us right now you cannot ignore the Federal Reserve.
We're watching closely that meeting next week on the 14th and 15th because, you know, we do have to take Mr. Powell's word for it. You know, he is going to eliminate the word transitory finally, and that, you know, inflation is here.
10-year yield, 1.48%. Gold up 0.3%, 17.84 the ounce. West Texas Intermediate crude up 3.2%, 71.74 a barrel. S&P rallied 95 points, up 2.1%. The Dow up 492 today, up 1.4%. NASDAQ up 461, a gain there of 3%. KFC's iconic 11 herbs and spices Fire Log. That is correct. It's Fire Log back again this holiday season. On sale exclusively at Walmart. KFC says it has an enhanced extra crispy scent created to fill your home with the aroma of its world-famous fried chicken. Shares today of Yum Brands, parent of KFC, up 1.9%. And that, we covered all, is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we talk a lot about the tightening labor market, the JOLT survey, of course, and the way that people are thinking about the Great Resignation.
There's so much going on when it comes to today's employment picture. Working Nation, by the way, founded by the former vice chairman of Akamai Technologies. We're talking about Art Bilger. It's a not-for-profit. It's looking for solutions to the nation's changing labor needs. We've got a perfect guest. She is the president of Working Nation. She's Jane Oates, former U.S. Department of Labor official. She served as assistant secretary for the Employment and Training Administration during the Obama administration. She also was a former teacher, and she joins us in our studio. Welcome.
Thank you so much, Carol. Nice to be here.
Well, it's great to have you here, and you guys are looking for solutions to really help others, you know, figure out better ways to figure out their labor needs or make sure that they are current in terms of what are the labor needs of today. Tell us about what you think are, because there are so many different conversations that are going on about the labor force. Tim's right, Great Resignation. We're talking about hybrid. We're talking about, you know, people just saying, I've had enough, I'm going to do it differently. What are the trends that you think that really stick with us?
So, look, I think you have to look at the Great Resignation and remember that people are examining their lives. They're trying to get a better balance. But also, if you just stop and think for a second, I mean, I don't want to minimize 4.4 million people in the last JOLTS report quitting. Series high, no exaggeration there. That's a gigantic number.
What are they quitting for? More pay or just more flexibility or something else?
I think a little bit of everything, but for the biggest chunk, I think, are the class of 2020 and the class of 2021. Think about that. If you have a sister, a cousin, a neighbor who graduated from a four-year or graduate program in 2020 or 2021, they couldn't find a job, right? In 2020 especially, the labor market was flat. So they went out and got something that was beneath their qualification, something that you didn't need their degree for. I think this is them adjusting. A lot, not the whole 4.4 million, but a lot of it is that those two classes classes from high school to associate's degree to bachelor's degree and beyond, them adjusting and going after a career instead of just a placeholder job.
That is a really interesting take. That's not one that I've thought of. So in a sense, we're going to see turnover be high because of that, at least for a very short period of time. But you think it'll kind of go back to where things traditionally are?
I think it'll go back to where to something. Who knows what the new normal is going to be? But I definitely think that those two bulk groups of people had a lot to do with the gigantic number in September.
Hey, I want to ask you, this is something that Carol brings up all the time, the idea of people who perhaps will not return to the labor force after the pandemic, when we do get to the other side of this pandemic. How should we be thinking about the definition of full employment or all the jobs recovered that we lost during the pandemic?
And Kathleen Hayes, who follows the economy, who's much smarter than me on this, said, I think it was like 2 million people have just said, I resign, I'm done. That's a big number.
Disproportionately women.
Yeah, yeah.
And disproportionately, if you take the women out and look at the full population, disproportionately workers outside of prime age, 55 and older, and a lot of them are having terrible times finding jobs, and they're just deciding they'll live on their savings. They're not going to make it,
But I know men and women who were basically out, maybe semi-retirement, but saying, I had a job, I was working, and then the pandemic hit, and they're just like, I'm done. I've got investments, I've got a pension if they're lucky.
The market's done pretty well.
Market's done really well, right?
Really
and
well.
just said, I'm done.
Well, a lot of them, what I like is they're going to nonprofits. Like there's this really cool nonprofit based in LA called Encore STEM, and it encourages people who had like math skills in their careers to come back and teach middle school and high school math. I love the program, and I think there's programs like that all over the country where these 55 and olders who do have the money to retire are going back and taking a second career with a nonprofit where money isn't an issue. They can work for less dollars.
Well, and we've also talked about, and I've been working on something on our Bloomberg Media side where it's women who are also starting their own businesses. We're seeing, first of all, entrepreneurship, startups at record levels, but women in particular, like I've had it with the corporate culture. I don't have the flexibility I need. I'm not getting the recognition. Corporations still don't get women and saying, I'm going to do it on my own.
No, I think that's exactly right. And I think, people sometimes trivialize that and say, oh, it's baking cupcakes and going on Etsy. It's much more than that. A lot of women are really out there starting service kinds of things, helping people. You think about how much we all are dependent on scheduling. There's a lot of women out there who knew how to schedule in the corporate world, and they're going to go out and help other people, and they're going to make a lot of money doing it.
Marissa Freeman, and I'm giving a little tease of a Bloomberg media event that we're doing, and she said, corporations don't understand women have one calendar. And this whole idea that your work calendar, your personal calendar, it's not like this, I separate these things. No, we are kind of the ultimate multitasker, and we've got to figure out how it all works in one calendar.
And so, fold in your kids' calendars, right?
And
like
fold it all in.
Little league practices and play dates.
Right, this is all part of our lives. Sit tight, we're going to come back with Jane Oates. She's president of Working Nation, former assistant secretary of employment and training during the Obama administration. Continue our conversation.
In the meantime, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. President Biden spent 2 hours in a conversation with Russian President Vladimir Putin today, and National Security Advisor Jake Sullivan says the president outlined the swift consequences if Russia were to invade Ukraine.
The discussion between President Biden and President Putin was direct and straightforward. There was a lot of give and take. There was no finger wagging, but the president was crystal clear about where the United States stands on all of these issues.
Sullivan says U.S. officials do not believe Putin has made a decision yet about invading Ukraine. The Russian leader has been seeking assurances that Ukraine would never be invited to join NATO. There was a Senate hearing today concerning the January 6th attack. An inspector general for the U.S. Capitol Police says there's more work to do to improve training, operational planning, and intelligence gathering at the agency. The Senate Rules Committee's ranking member, Missouri Republican Roy Blunt, agrees.
We're going to work together to see that the officers are better trained, better equipped, and better prepared.
Blunt says, though, it is important to learn more about the leadership failures on January 6th. Former White House Chief of Staff Mark Meadows is apparently no longer cooperating with the House committee investigating the January 6th insurrection. His attorney cites a breakdown in negotiations with the panel. He says a deposition would be untenable because the panel, quote, has no intention of respecting boundaries concerning questions that former President Trump believes are off limits due to executive privilege. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic here on Bloomberg Business Week. Our guest is Jane Oates, president at Working Nation, former assistant secretary of employment and training during the Obama administration. We've got about a minute and a half, and then we'll do some more news and come back and talk some more, Jane. But education, it has been supposed to be the great leveler, right? The great opportunity for so many. But I think increasingly it's safe to say that education has gotten so expensive that it, once again, is kind of helping to widen the gap. Even though a lot of academic institutions provide scholarships and so on and so forth, still, I think it's really problematic for a lot of people in terms of access. You're a teacher, like you understand the importance of education. How do we need to maybe disrupt education? And maybe at all levels, but I'm also thinking at the higher, education level.
Well, I think all education, post-secondary education institutions should be really nervous. 3 consecutive years of enrollment decline. The public is starting to vote with their feet. I think the answer is embedding industry-recognized credentials into academics, not anymore making it an either or, but saying you need to have digital skills, whether you're a poetry major or a comparative religion major, you need to have digital skills. So let's embed those credentials into your academic curriculum.
What role does the government need to have when it comes to paying for higher education?
Well, they need to, in the K-12 space, they need to keep up with special education IDEA funding, and they need to continue funding low-income kids through Title I. In post-secondary education, they have always really just done Pell Grants and amazing help to the poorest, to make sure that education at any level is more affordable. I think they may need to put a little bit more money into institutional aid. Right now, because so many institutions, particularly smaller institutions, rural institutions, tribal colleges, HBCUs, they really got hit. They're tuition dependent. Most of them don't have large endowments like the schools you think of. We may need to help them.
All right, we're going to come back with Jane Oates. She's president at Working Nation, former assistant secretary of employment and training during the Obama administration. Our conversation will continue right here on Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the companies reporting earnings after the close of trading, the luxury home builder Toll Brothers. It's out with EPS for the fourth quarter that did beat the average analyst estimate. Shares up after hours by 0.3%. Stitch Fix shares plunging 17% right now after the clothing subscription company's forecast for second quarter revenue came in below the lowest analyst estimate. Again, Stitch Fix shares down now by just about 17%. An update for the Dow, the S&P and NASDAQ, biggest rally in 9 months. Major averages climbing today on optimism that the Omicron variant will not derail global growth. S&P up 95, up 2.1%. The Dow up 492, up 1.4%. NASDAQ up 461. That was a gain of 3%. 10-year down 13/32, 10-year yield 1.47%. Gold up 0.3%, 17.84 the ounce. And West Texas Intermediate crude rallied 3.2%, 71.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. Jane Oates is with us, president of Working Nation. She's former assistant secretary for the Employment and Training Administration during the Obama administration, a former teacher, as we mentioned earlier. She's still with us in our Interactive Broker studio. All right, I just want to give a taste of some of the conversation we've been having. When it comes to higher education colleges, does it make sense that they're $80,000, $90,000 a year? And I know there's great educational institutions out there, but holy moly.
I know it's gotten
You sound like
crazy.
you're paying tuition, Carol.
I am.
Okay.
Welcome to Parents Paying Tuition.
No, and I appreciate academia. I really do. I think it's a great environment for kids where they can just kind of go and study things. But I do wonder about, how many people it's not really accessible. And I know that there's assistance at the lower end, but there's a lot of people in the middle who I feel like it's tough.
Well, I think the middle class. Yeah, I think the middle class is getting frozen out of college. They can't really. The Pell Grant isn't there for them. They make a little bit too much money, or they don't have enough kids.
Right.
And they can't. They're not the A+ student in the class, so they're not getting academic or sports scholarships. They're caught with nothing. So and
that's another thing. There's lots of sports scholarships. Forgive me, but there's not a lot of academic scholarships anymore. Which is like what?
Yeah, it's really hard. I think, look, if you're going to go to a Research One, a lot of the money from that institution has to go into doing research. And thank God for that, right? I mean, that's why we have the vaccines that we have. It's why we have the health improvements we have. It's why we have the new industry standards that we have, quite frankly. But I think, the tier below Research One has kept up with the Research One in terms of tuition. And I think the public is now saying why. I mean, they're great employers. Colleges pay great salaries to their faculty, which they should, and have great benefits packages, but they're not going to be open. I think we're going to see a lot of colleges, sadly, it breaks my heart to say this, not be able to make it. They made it through the pandemic because the administration gave them money to stay open then. Now, so many of them are just really struggling. That's like a PSA for you to give money to your alma mater.
Maybe, though. I mean, if people feel like they have a connection to it.
Yeah.
But wait a minute. When there are endowments that are billions and billions of dollars, so is it a place for learning and education, or is it a financial company all of a sudden?
Yeah, I think that's valid, but to be honest with you, probably only 10% of the colleges have an endowment like you're talking about. They're the names that you would recognize, the Ivy Leagues, the great, state flagships and things like that. The majority of people go to smaller colleges that some people haven't even heard of, that are fabulous institutions where they're getting great educations. What they have to do is start to parlay that into something connected with work, so that middle class kids go there and say, here's what I'm going to spend. I hope it's not $80,000, but if it's going to be $50,000 at the very least, what's my ROI? What am I going to get in terms of a connection? What's my return on investment? Am I getting attachment to an employer? Am I getting a paid internship? Even if it's something that's not paid, like I want to go into, like I did, policy. I'd like to get an internship on the Hill. Is the school helping me make that kind of connection? Then that's a return on investment.
So what's the best way for somebody who perhaps is in college right now or will be graduating soon to think about how they can find something or study something that will be applicable to them throughout their careers?
Well, I would say anybody should take a minor in something like data analytics, something to give them data visualization. They don't have to major in it if they don't want to, but they need to get familiar with it. And really, I can't say enough, they should be out there getting work experience. The people at the college, most of them went and got their PhDs straight through and didn't work outside of academia. They can't really help them figure out the world of work. They need to get out there and figure it out on their own.
What's the role of companies more specifically in terms of making sure that we have the right workforce for the future demands?
I think there's some companies out there that are doing amazing things. I'll pivot from what I was just saying. Students should look at internships. I can't believe the growth in paid internships in corporate America. Some companies that have been doing it for a long time.
We have a great internship program.
I was going to say, how many interns does Bloomberg have? He's always been about this. But, Lockheed Martin, and Lockheed Martin, when Wes Bush was there, he's been gone about 18 months now. But when he was there, they did about 80% of their new hires came from their intern pool. That's a really good thing for kids to know. But I think I think of other businesses. You probably had Nick Pinchuk on from Snap-on. Snap-on has been great in the lower end careers, kind of the blue collar, skilled trades kinds of things. He pays for material at colleges. He put together a program called NC3 that has a training program for the community college faculty that are doing automotive so that it's quality controlled across every college. It's fabulous.
What about, though, making sure, I say this as a parent, like to my daughter, I'm like, you want to come back and live in New York City? It's an expensive place to live. You've grown up a certain way. You need to think about your income. And I hate to say that because I was lucky enough to do something I love, and things have worked out pretty nicely. But what's the responsibility of companies to make sure that they have the future workforce and provide internships, but also pay more than a living wage? Where are we on that?
I think we still have a lot of work to do there. I think entry level.
But why not share the wealth?
Well, I agree with that. But I think a lot of people see entry level workers as expendable. There's big name companies that have come out and said, we think we get everything out of a worker in 3 years. So if they want to leave, no loss to us. That is really and you notice I'm not naming them on your show. But
if you could see the bubble above my head.
I think everybody knows what you're talking about.
Anyway, go ahead.
But if they would invest in people, give them the money up front. The COVID experience of people getting signing bonuses, don't give me a signing bonus, give me a step up in salary.
Give me a commitment too.
Yeah, that's exactly right.
Jane, what about labor unions? How does that fit into the conversation that we're having right now?
Well, full disclosure, I'm a big proponent of organized labor. When I was a teacher, I was a member of AFT. I think they give workers voice, and people only notice labor unions when there's a strike. And certainly we've had horrible strikes with John Deere and Kellogg right now that have created great supply chain issues. So I understand people's concern. But labor unions force a table conversation between workers and employers, and workers can be as hard-headed and negative as employers can be. They bring them to the table and really create an environment where we're investing in each other. So when we talk about talent, shortages, grow your own. Make your entry-level worker into your mid-management person. And labor unions really have done that beautifully, not just in construction and manufacturing. Now, they certainly did it in teaching, but now we're starting to see, the organization that's the fastest organized is the cannabis sector.
Wow. Yeah.
That's really pretty cool because that's workers across the whole spectrum, people growing, people manufacturing, people selling. It's really cool.
Thank you so much. This was really terrific. Come back anytime.
Oh, it was so fun.
Really
Thank you.
Productive conversation. Jane Oates, she's president of Working Nation, former assistant secretary of employment and training in the Obama administration.
Yeah, please come back soon. That was great.
Just some really good things to think about. My mind is still spinning. For Tim Stanovic, I'm Carol Masser. This is Bloomberg Radio.